What's up, guys? Good morning, ladies, gents. Sorry for being late. I am cursed with the old let's keep him up all night talking about my cat when I stream. It's so crazy. It is so insane. I literally thought to myself, here it is, 2 o'clock in the morning, and my cat is still continuously trying to keep me up. She woke up after I was done. I did a few things, and time went by quick. But anyway, we're here. We'll be all right. I got a few hours sleep, so I'll be good for the week. I haven't had any issues for 2 weeks since I've been gone. It's hilarious. All right, guys. So I was thinking yesterday. What I didn't go over was okay, the audio is working. We're good, so I can hide this. Let me get a couple things set up real quick. Let me get my level 2 and some of these things I want to get set up. So some of the stocks that I've been watching, Meta, right? You might find this one funny, but I've been watching GME. GME has actually had a pretty nice setup. That I'm waiting to see if I get a shortable bounce, if I get like a nice shortable bounce, and I'll show you guys where that is. So there's some news that I wanted to go over. I don't know why. I don't know what happened to my alarm. I don't. That's how out I was, is that I didn't hear it, and I woke up and here at like 8:30, and then here we are was trying to set the stream up. But Meta, I'm going to be looking for Meta to pull back to see if there's a pullback in this area up here. It's either going to be this leg here that I'm going to look at. It's all going to depend on the overall markets. The overall markets are pulling back. But I said to myself yesterday that if we got a pullback, like in that area of like on the SPY, like 461, 460, I need to think about taking a long. But I'm going to look at rates. We need to look at the dollar. Let's go look at yields and all that stuff. I'm just giving you guys some of my ideas. Prior resistance. It's just a pivot support level right here on Meta. This is at 328, right? 328. We break through it. You still have some resistance up here, right? You're still getting into an area of consolidation, right? You got a lot of up and down price action up here, right? Just right up in this area here, right? Pretty much when you get up into here, right? That whole area. So let's go to GME real quick and I'll show you guys what I'm seeing there. So GME, Roku, Tesla, those are the ones that I've been watching for the past couple days. So yesterday, let me see what I got going on here. So we're stuck between the 150-day moving average. That's one. So if you see like these blue squares, right? If you see them, look, that's it. Let's see if we get a bounce today on GME. This had some nice trading. The volume's kind of really pulled itself back. It's having these low volume pullbacks here. Let's see if it tries to hold itself up here. What's it at? 1510? 1510 area. So let's see if it holds this daily 9 EMA. It'll probably try to bring this 100-day moving average down a bit, right? And then if it just pulls back down to its area, its range, you'll probably get a bounce, and then maybe the next bounce after this. See if it draws down today, bounces. I'm not trying to sit here and predict to a T price action, but long story short, that's what I would be looking for, is to see if it tries one last time to try to get a bounce, and if it does not break through that 100-day moving average. Because look at this daily chart, right? You have a double bottom low here, double bottom, really a triple. You have this double bottom, you broke back down to it, and then you made it in an area of resistance, right? Pretty simple on some nice volume, right? So that level broke on volume. It made it resistance on volume. So that's what I'm looking for. And right now it's just consolidating. But you're getting these bounces like anytime you're getting a pullback on GameStop. So you can see right here at that $14 level, it's getting bounces and it's with volume. So I'll take either or. I'm neutral on that. Um, yeah, what's up, buddy? I told you I was going to be on. The market was trading sideways, man. And I just like I said, I needed a to, I guess you could say, find myself. I just needed to just take a break. That's all it was. So Meta, GameStop, Roku, Adobe, Oracle had earnings yesterday. Market's opening up in 5 minutes, of course. So we're gonna try this whole thing again tomorrow. I'll just stick to the ones that I've been looking at. Let's see if it tries to bounce. Right? If Roku breaks below that low of 90, then we got some room down to what is that? I'm sorry. If it breaks, yeah, if it breaks that $100 level, breaks the $100 level, you don't have much stopping you to get down to 96. Um, the volume is pulling back on this. Let me see here. Yeah, we'll just have to see what the volume does here. The volume's pretty much even. I can't say you're getting the buyers, or when you do have your 50-day moving up above your 100-day. Moving averages are anchored upwards, so this could be a nice bounce. It needs volume, though. It needs some volume. I am watching Adobe, um, but they have earnings, so I'm going to wait. I think they have earnings Wednesday night. I think. I'll have to look. Don't quote me. Yeah, on the 13th. So that's tomorrow. Who had earnings last night again? Oracle. Oh, there was some news, right? Boeing, they're doing layoffs. Um, I can go through all that a little bit later. Like I said, the market's getting ready to open up. 103. All right. This thing's just getting hammered. You have a double top support level right here that it broke, it looks like. All right, let's see what we got going on. Give me an hourly. Let me do this because I may try to play this. Well, we have a pivot low here. And that's going to be an area. This here could be an area. 101.80. Let's do this. Let's do this. How about we do this first? Let's go to the daily chart. I always go to the daily chart because you want to know the major areas of support and resistance, right? I think that's key. I don't think enough people do that. Because that's going to give you your for me at least, it gives me my, if I want to, like, where's my final take? Like, where am I trying to go? Where's the destination? So, 103.15. You don't really, if you want to ask me, we don't really have much stopping us. You don't have much stopping you until you get down to the 90s. I think that's where she wants to go. You're below all your major moving averages. Holy cow. 98. That'll probably be our first area of a bounce. Be around that 98 level. I don't like this chart at all. I'm sure if I look at it on a different chart. All right, market's opening up. Let me get my stuff ready, guys. If I don't see your comments, you'll just have to give me 1 second. Um, all right, so Tesla broke. Tesla just broke, guys. I mean, we know where we're headed, right? We're going to be heading down to this 50-day moving average is where we're going. Shit, I gotta hurry up. This sucks, man. This is why I... Alright. Come on, what is going on here? I'm waiting for a bounce back into that low if I'm going to take this trade. I'm not even logged in on my other screen here. Yeah, we don't have much stopping us. Let me move this moving averages really quickly. It's just tanking, guys. See if you get a bounce here at 236. I'm looking at 236 for a possible bounce back. It may just cut through it. Like I said, you're headed right down for that 50-day. God damn it. Oh, that's a trade that I've already missed. That's a $5 move right off the bell, guys. Unfortunately. But, you know, that's what I get. That's what happens when you wake up late and your cat keeps you up. I mean, okay, it was my fault then. Okay, you're right. She said, hey, I don't know if you guys heard her. She literally responded to what I just said. Literally. That's hilarious. I can't even make that up. All right, so there it is. You're turning at 235 in a resistance. All right. Oh shit. All right, day of reckoning for Tesla. We're about to find out. So here's about the area that I was looking at. Nah, it's not. You still have a few more, but 460.50 on the SPY. All right, 460. Let me get everything ready. Come on, man. I don't know why it does this to me. All right, so we got. Can you see? Let me see here. Can you see all the stock of the weapon industry is going a good journey? Hold on. All the stocks, all the weapon stock industries is a good journey. Is there any fundamentals in there? I listen. If from me, just from what I've seen in the markets, and man, I don't know. I don't think that's where you're going to make your money. I really don't. I think where you're going to make your money is going to be in your tech names, your software. You know, like, you know, you got to ask yourself, like, how. The main question that I give to, it's not bad to have. It's good for diversity. It's good to have. You can make some money, of course, right? But unless you're getting a low startup company, that's that you're catching from the bottom, if you know what I mean. Um, it's not like you can't make money, but I don't know if that's going to give you a 10 bagger, a 5 bagger, right? Even a 2 bagger, you know. Um, so me personally, you want to broaden yourself out, of course, but I don't think that's where. It's not where I would put myself. That's all. That's all I'm saying. I would definitely buy them if there's a low, like if there's a catalyst, and they're on their lows, like a Lockheed Martin, right? Um, like if you had a Lockheed Martin and something happened and they took it overboard, right? They took this news way overboard and this thing's down here at like the low 300s. Well, I'm going to buy it. You know what I mean? I'm going to buy it. But other than that, they've ran, and look what they've done, right? You've gotten pretty much everything you needed to have, and they have just been mediocre the past few years. They're trading sideways. We had that nice run up with the war, and then that was it. You know, actually, doesn't this look? This chart right here looks a lot like the Tesla daily setup, doesn't it? This looks a little bit like Tesla daily setup. Tell me that it doesn't. That is actually pretty scary. How close that looks like Tesla. Wait, that's not. Okay, because there was a T in there. All right, never mind. Scratch that. That's a nice support area down here. That's a nice chart. Right there at that 398, 400 level. And look at that. You gapped right up off of it. Pulled back into it on earnings. Now you're coming into the 50-day. You're going to want to see if it rejects the 50-day or if it can bounce above it. This looks really nice. This could break out. Thank you for bringing it up. It could break out. I don't know how much, your expectations have to be, somewhat minimal. Because this thing's got to run to 8. Do you think this thing's going to go to 800 in a couple years? And double, So, it's good for diversity. It's just not something I would, sink my teeth in, and would be too overly focused about. But that's a nice chart right there, guys. That's a nice weekly chart. It's a really nice chart. All right, let me get back to business here. Oh, man. I think it might already be starting. They're already going to sell this thing off. And like we said, 14 was the level. You know what? I could take it right now. This is a nice area right here. Right there. It's going right back into it. Look, you have 90 MA and VWAP. If you turn this area here into resistance and turn 15 into resistance, that could be a nice short right there that I'm looking at right now. Look at that. You have your 38.2 fib lining right up with that low. 50 with it, but lines right up with VWAP. See if it turns that into resistance. That's what I'm going to look for. See if you get some selling pressure to step in here. I will take this. That's nice low volume. I'm just waiting for my stuff. I'm not even logged in. Let me make sure you look at the whole picture. Again, I'm not telling you what to do. I'm just telling you what I'm going to do. Oh man, I gotta clean her litter box. Alright, so there would be the entry. Yeah, I got you. No. Oh, I know. I know exactly what you mean. Yeah, absolutely. How have you been, man? How have you been, buddy? So I may take a shot. I might want to get some time on this. Um, hold on. I'm not even logged in. God damn it. I would like to see these time and sales start kicking up and moving. I'm not in this yet. Give me 1 second. All right. This little girl is getting so ornery. All right. So this she's moving slow, but again, I may gonna give it a minute, let it do what it needs to do. That's a little bit of an increase on volume there, but I would still like to see that rejection. All right. It broke it. Let's see the volume that it broke it on. I mean, the volume is going to be decreasing day after day after day. Um, Let me make sure that I'm doing my due diligence. 1445, 1440 is our would be my target. By the way, 1450. All right, right down here in this area. So that's a nice 50-cent move. I don't know what Yellen was just saying because my cat's sitting here yelling at me. No, 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 no. You're okay. I don't know why when I do live streams, everything just has to fall apart in my life. Just to put it lightly. Holy shit. I don't get any sleep. You know, it's just so crazy. It's hilarious. And there's the rejection. It's a nice rejection. Right there would have been a nice profit, right? I don't know how much these moved. Let's look at those. So, let me pull up the SPY real quick because sorry to hear that, man. So I'm looking to see if we can catch a bounce in right here in this area. I have no trade ideas this morning because I wasn't. I was up late last night. Story of my life. Go ahead. You're fine. Mm-mm-mm. All right, gotta find the reversal now. All right. I would. I still think a lot of people may try and come in here and Yeah, I was muted, but I'm here. I'm just trying to set an alert for Tesla to see if it gets back up into this area. But I'm failing to be able to do that. So it looks like I'm going to have to just watch it and keep going back to it. Um, show alert book after I press create. My sound option submit now reverse off. Okay. Oh, okay. So this is where I'm going to look for Tesla. See if we can get back up into this area. I think it's going to be up here. Just give me 1 second, guys. I'm up here. I'm just because now it's already almost fucking 10 o'clock and we don't have nothing on. Oh my god. Yes, I want to replace it. Of course I do. Sorry for that noise. So there was some nice looking charts here, man. She's gonna try and nope. You have some nice volume coming in there. Does anybody here use Thinkorswim? Do you know how to lock these screens in to just like where you place it for it to stay there? Because I can't find anywhere to be able to do that. You know, to save it right there as I have it, for the most part, instead of having to like fix everything. All right, so there's our bounce. So here we go. We're going to bounce up into that 237. Let's see if we bounce up in that 237, 238 level. And there's the market bouncing off of that level as well. I gotta tell you guys, I'm thinking about it, but I know Tesla still has some further downside. Your buy-in's not until the low 230s, like 232. It's a nice hold to the 50-day moving average. Let her curl herself back down for a pullback. She almost wanted to. She almost wants to. There she goes. She's picking up steam. There she goes. It's a nice hold. It's a nice hold there. I'm looking at two. I'm looking at the 240 calls on Tesla. And again, I'm only looking. Let me see here. Let me make sure that I'm seeing everything correct. I still want to. I still feel like I should wait for the bounce. to get short. But I kind of want to take a long here. All right. All right. So the SPY is going to come into that support from yesterday. It's trying. There it goes. It just broke up above it. It acted like it didn't want to hold. Shit. Um, I'm seeing Apple chart. I think it might go to 199. I was thinking that too. I was looking the 200 areas myself. I was liking that too. If it held. If it held. All right, if it holds. I was thinking that as well, man. I was looking at that and like this is your second pullback it's given you, and for anyone that doesn't take it, it's got to look enticing here if it holds. Um, yeah, I agree. Especially if you have that soft landing. If you think the Fed's going to pull this off, I would. Yeah. Yep. There it goes. It might start. It might be starting it right now. It might be trying to start that right now. If I had to say, if it can get up above this pre-market support, if it can get up above that at 192.40 area, it could look ripe for it, for a pushing. The SPY is struggling a bit here, though. All right, so let's see if we can pull this back into VWAP. There's your 9 EMA. Man, this has got to look enticing for the long. We have some nice volume here on Tesla. $240, 239. The daily 9 EMA, the daily 9 EMA will probably anchor itself up. So that 240 area looks like that's where we're headed on Tesla. It's where we look. It looks like we're headed to. If you had to ask me, you're going to have some. You're going to have to see what we do here with this um, pre-market support. If we can break above that with some volume. Man, I can't. I hate how the chat is like this. I can't see your comment. I can see it, but I can't see the last word. Yeah, I got it now. I got it. Let me give me 1 minute to just get things. Let me find myself a trade here before the day is over, and I'm just on here talking. I want to see what we do. So I say if we're trying to turn this 236 back into support, then you got a clean shot. Should have a clean shot right to 240. gotta be kidding me. I was looking at Meta this morning, and there she goes. Wow, was there news? It's all because I wasn't able to get up. I was up too late. I didn't get any sleep last night, so therefore I wasn't able to get some of the work that I do in the morning done. It's just hilarious. It's hilarious. Like the past 2 weeks that I've been going, I've been getting up at 4:30, 5 o'clock, starting my day bright and early, and then the minute I get back on here, start going back down that road. Oh lordy, that's just where my psychology is headed to right now. I gotta get rid of it. Um, so Meta, look for a bounce back to 327. All right, possible. See, it looks like it kind of already done it, but I would need a bounce back or a pullback to 327 in order to think about taking a position on that. That would be a nice area here, though. If you could get a nice pullback to 320, I'm going to wait for that. I'm going to wait for that 328, 327.86 area to pull back and see if we can't hold that. And, you know, see if we can't take a long there on that pullback. You're going to have to pay up for it. But my stop will be tight. It'll be that pivot low right here. And, yeah, so to give you an exact number, that's what I'm looking for. Just be patient. Let it pull back as it broke through it on volume. It should hold it as support. It may not. That doesn't mean it has to pull back today. All right? It could do it tomorrow, 2 days from now. It is what it is. We let it go. Wow. That's brutal. That was one of the ideas that I had. Yeah, I think. Well, I can't remember. I think I remember. I remember the one I do remember. Oh, I do remember that. I do remember that. I remember the time when I forget who it was. I took a Tesla trade and I'm like, shit. I didn't do my due diligence. Look at this 1 minute chart real quick on Meta. That's actually, I mean, the volume's pretty consistent, but it's actually not that big. So what am I talking about? That volume is actually, I wouldn't call that an increase in volume. It's got some nice volume from what it usually has. Maybe I'm looking at it wrong. No, so it broke it on light volume, guys. Be careful. Be careful with this. Because, yeah, look at the volume here. Look at that volume. It's actually not that big. So if it can get to 331, I'm going to change up my game plan here. And if we get up here to this 331 area, 329, 330, let's see if we can get a reversal on this name. 326 looks like an area. I should probably mark that area. Why does it keep giving me the 5? Oh, because I changed it. That's why. 326. 326. It looks big, but I'm just thinking to myself that the volume's not that crazy. Yeah, 326. 326 would be a pullback area. See what I mean? It's breaking this level on volume, or on decrease in volume. Let me take it over here. Let's take it over here. So I wonder if the markets are going to turn around. Because look, the SPY is going to be bumping into pre-market lows and that pivot high, right? Look at the SPY. So if I take us to the SPY, maybe give me a 5-minute chart so I can show you exactly what I mean. All right. We're bouncing into this pivot high right here. Pre-market lows and this pivot high. Right there, like 462. Right? So let's see if Meta starts to pull itself back. 462. All right, it's a general area. This my monitor's huge, so it's going to be. It looks a little weird. It looks better on my laptop. I'll put it to you that way. 462.06 is what I have. 462.6 area. Right in there. Right where it bounced up. Right where it pulled back. Right there. All right. That looks like an area where it could pull back. And then if I go over to Meta, I got to delete that line. The Meta's also working on 331, which is yesterday's pre-market lows. Friday's pivot high where it broke through it and then held it. So this could be our reversal. It could be. I'm going to be patient. So get a pullback right to that 327, 326 is what I would look for. She said we need to cooperate with China. So 326. I'd like to see if we can get a pullback to 326. It may not give it to us. There may be news. Let me find out real quick. Let me look this. Um, buys Microsoft, Meta. So there was some. What's funny is you see this. Kathy Woods is selling or buying 9 million worth of Meta and Microsoft, but there's actually someone from Microsoft actually also doing the selling. So you're kind of, you know, just I can make an argument for the other side as well. Come on. I gotta I gotta find myself something, guys. I'm sorry. All right, so Tesla reversed. Tesla reversed. I still, man, I still wanted this area up there. Um, so that's telling me you're getting selling going into that area. Um, I'm going to be patient. I think we can probably get another bounce back on Tesla. I'm looking to trade Tesla today. It feels like I feel it feels to me like Tesla wants to make a move, and I may leave this trade on if we get it. If I can get it, I may leave this trade on for a day or two. Um, I know a lot of people. There's nothing wrong with EVs. If you guys, you want them, you like them, That's fine. The only part that I don't like is the fact that, something goes wrong. You got to send it to them to fix it. I think that's why a lot of people, you have your people that are just stuck, like that just want to make a scene about everything. Um, you know, I don't know. I brought it up because it was on CNBC about people not adjusting. And the Volkswagen CEO, and you'll have CEOs that come out and say, you know, vehicle pollution only doesn't even permit like 0.1%. It's not even 0.1% of pollution. That's not where the problem lies. And I mean, these are CEOs of companies that do a ton of R&D. You know, they do a ton of R&D, so they know, or they would be the ones to know. Let's see, man. I had this feeling today that I was going to come in and be stuck because I wasn't prepared. That's what I don't like, because Tesla might go into consolidation. It may start going back and forth. It may not be tradable. Hold on, let me see the. I'm stuck. What do you mean I'm stuck? I can see it on. Yeah, I have it here. Hold on, let me see. Let me make sure. Let me make sure. I don't know why it's lagging. Yeah, I'm not sure what you mean, buddy. I'm not sure what you mean by I'm stuck. Because I can see it on my laptop that I'm okay. All right, I want to look to see what the runners are today. See what stocks have momentum and which ones don't. Let me do a bit of work here. Yeah, Tesla's not going to be on the list. Come on, man. So once again, I talked about this last night. No, you're good, buddy. No, I appreciate it because it, you know, um, let's see if Tesla can. See if we just do the same thing we did yesterday. All right, get up, bounce. Here it goes. See if this new 15-minute candle gets us to bounce up into this 9 EMA, and we start turning that into resistance. I feel like it may try to double bottom and bounce back up to the 100 day. You know, I also am sensing a bit of that. So I'm gonna let her do what she needs to do for a little bit because she's not ready to play. And Jimmy ended up bouncing. She ended up bouncing. Why does it look? Oh, okay, that's why. Looks like the long here. Let me make sure I'm doing my due diligence. What is that? 1550? 1550 long? Let me see what these options are like. That's funny. It's hilarious. You know what? Nope. She sleeps right with me, literally, right up against me, right up against me, and she puts her paws out. She's got to be. She's got to be touching me. She's got to feel me. She'll put it like right on my hands or like just so. She's just irritable this morning because she wants something that I don't have. She wants food that I'm not giving her. I was giving her some of her allergy medicine, so I was giving her, you know, food that I knew that she would eat with the medicine, and she's just wanting that, and she's not getting it. I can't just switch up her food like that. So I gave her a small amount of this other food that I give the cat that's outside, um, and she's just throwing a fit because of that. And then she was sleeping on the live stream last night, and then as soon as I get done, she wants to get up and play. And as soon as I fell asleep last night, just right up in my face, meowing. I'm like, girl, I'm gonna kick your ass. All right, this isn't moving. Let's go to Meta. Meta's got the momentum. Meta's moving. Damn, this thing is strong. There's got to be enough. There's got to be something to it. We have a gap fill up here that it's getting ready to enter into. Wow. Fuck. That's so frustrating. There was a ton of news this morning. I don't know if you guys went over some of the news, but there was a ton of news this morning. I think I seen. Was it Boeing that was? There was layoff. There was just news all over the place. Um, Look, Microsoft's still flat. HPQ. You had some selling from Berkshire Hathaway. They literally cut their position in half. Um, Oh, yes. Listen, dude, she loves bags. I didn't know what you meant at first. Oh, my God, yes. She loves bags. Boxes, bags, yes. Oh, absolutely. 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 Especially like, shit. Look at AMD, still going. AMD is a monster, man. AMD is a beast. I feel like that's some nice volume there. Shit. Now I'm getting the impression that I need to get long AMD. All right, call it FOMO, call it what you want, but I think you're going to get this thing is just going to run until it gets up to 140.50, hell, if not up to 150, up at those highs. Um, so I may be wrong, but that was my pullback on the SPY, guys. And that 460 area, 460-60 area, man. That was the buyable dip. Fuck. What's Nvidia doing? I know these large caps are lagging. Hold on 1 second. I seen the comment. Let me get some levels on this. All right, so she's bumping right into the 100-day. This is CC. CC. I'm gonna go get a cup of coffee. I'll be right back. Look for a pullback. Unless this thing starts to blast through this 100-day moving average, then look for an intraday, like 2-minute, 3-minute, 5-minute, whatever you use, pullback into the 100-day. But I want to see if I can get a buy at $2 on CCCC. Like 203, 205. It probably just did it there at 225. We got room to $3. It's got room to $3, but I want to get a pullback. And it's got the 200-day moving average right there as well. Alright, this might be on the list. Might be. I think I might. If it gives me the bounce back, I'll probably take a shot at this trade here. Again, you gotta. I would wait for the pullbacks on this. You gotta. If you don't trade small caps, please do yourself a favor. Don't, don't lose. Don't put up more than you can't lose if you don't know how to trade these. You want to have your stop loss where it should be. They can halt. You can get stuck in the trade. I mean, anything can happen here with these, so just be careful if you don't trade these. Yeah, 208, 205 area. I want to see if we can get a pullback. Oh, it looks like it already did pull back into it right here. Right there. Looks like it pulled back into it already, and now it's starting to blast off. But I'm looking for the bounce into the 100-day, pull back off of it, find some buyers here at like 212. That's what I'm looking for. That's what I'm personally looking for. All right, so you got to increase in volume through the high. So we should be able to get this area to act as support now that it broke. So I'm going to let it do what it needs to do. And I'm just going to sit here and be patient. And you know what? Look at that. That pre-market high lines right up with the 9 EMA. Now Beyond Meat is moving. You're going to start getting a lot of names probably starting to squeeze. That's what it sounds like. Sounds like you're getting some of these names that are shorted to start and bounce. Yeah. What did we say? I told you guys. If you don't remember, on the live streams I said, that it would be next spring, right? I think it'll be a little bit longer, but, the only way that the only thing that I'm basing that off of is prior, just going back and looking at the data, and I think a lot of people fail to do that because you hear so many people talking earlier about how we were supposed to already be in a recession. Well, have you went back and looked? You know what I mean? Have you went back and looked at every other rate hike cycle and done and seen the correlation between time and things that had taken place? Oh shit, this thing trades options. Are you serious? CC trades options. That's hilarious. Okay, I know that that's puts. What? All right, so look at the 1 minute. So it's coming into the 9 EMA on CCCC. I'm going to set. I'm going to take a stab at this at 211 area. I'm actually going to set some orders there right now. All right, so I'm going to. I'm going to limit order in here. 212. I'm going to set these right here around. See if I can get maybe 213. Fuck. I don't. It doesn't really tell you that. It'll tell you maybe like an area from where people are watching it, but I don't have enough people that that even watch them to have anything like that. I don't have enough views. I'm gonna use the restroom real quick. Be right back.
When it comes to equity.
All right, Steve, thank you. Steve Leisman. And
Thanks.
a quick programming note, we're going to have a whole lot more coverage on the economic outlook. This hour, NEC Director Lael Brainerd is going to join us from the White House, her first take on inflation, plus an exclusive you do not want to miss, an interview with Treasury Secretary Janet Yellen on this show tomorrow, 10:30 Eastern, right here on Squawk on the Street.
Still ahead, Ford slashing production plans for its F-150 electric pickup. We're going to break that down, plus a boots-on-the-ground read when it comes to EV demand in this country and where it's going in a moment.
I'm still gonna wait for this pullback. It doesn't seem like it's gonna give it to me, and that's okay. It's all right. Look how the volume on the break to this 100-day isn't. You know, that's a low volume break through the 100-day. So let's see if this quickly rejects that break. That'll be a bearish. That'll be a bit of a bearish take on it. Not fully, but, you know, see if it pulls itself back. Let's see what happens here. See if it pulls itself back. And back down underneath of it. It's got a ton of volume. I don't know what the float is on this thing. And that sucks, man. I feel like I wasted the day today. I'm gonna go make pour some coffee in my cup, and I'll be right back.
Welcome back. I'm Silvana Hanau with your CNBC News Update. Ukrainian President Volodymyr Zelensky is meeting behind closed doors today with all 100 senators. He's in D.C. to discuss an impasse in Washington over more aid to help Kyiv in its war with Russia. Zelensky is scheduled to meet with President Biden this afternoon. Meanwhile, the Biden administration announced it will impose visa restrictions on nearly 300 Guatemalan lawmakers, private sector leaders, and their families. The White House accuses them of undermining democracy and the rule of law following attempts in Guatemala to block progressive President-elect Bernardo Arevalo from taking office in January. And Harvard University's president will remain in the role following nearly a week of outcry over testimony she and other elite university presidents gave at a congressional hearing about anti-Semitism on their campuses. Demands for Claudine Gay to resign gained steam over the weekend after the University of Pennsylvania president stepped down, but Harvard's board released a statement of support for Gay, saying she is still the right leader for Harvard. Guys, I'll send it back to you.
All right. Thank you very much. Calls for genocide, they say, are despicable and contrary to the fundamental human values, and that President Gay has apologized for how she handled her congressional testimony, David. But I think there will continue to be questions about the moral leadership of Harvard. Ford slashing its production plans for an all-electric F-150 Lightning pickup next year. Philip.
All right. See, what did we say? Look at that rejection. Look at that rejection. I wonder how many people got long and didn't really pay attention to detail. That's the biggest. As soon as I walk in, she comes in and opens the door. This fucking girl, man. I want to kick her butt. Anyway, it's no big deal. As soon as we break above it, it pulls itself back. You know, you want to take notice, and when you're taking trades, notice things like that. Like, hey, we're breaking through a significant moving average. We're breaking through a level, right? Is the volume with it, right? Is it accelerating because it found support and is able to break through that level? It needs to pull back, grab some liquidity, bring those buyers in, because just like other traders, my orders are down here as well. 215. You know, you may start to see some buying here. But now the chart is setting up a little bit differently. Right? What we did have was a possible pullback off the 100-day to meet the 9 EMA, but it broke it. So then it raised the 9 EMA. You know, so things might change up now. Things may change up. That's just my opinion on this. But, you know, see, like now you're going to break the 9 EMA on the 1 minute. I think this trade might fall apart, guys. My personal opinion, it may just pull back and consolidate. I don't think, you know, when I say, you know, fall apart, like my trade idea for the long. Man, see, it came up and broke that 100. I don't like the trade. Doesn't mean it can't go, but you can see how the volume is. Like, look at this 1 minute volume. Look at that 1 minute volume on this. You know, I know it just changed, but like you're not getting the acceleration you could have got if they would have let this thing pull itself back. Now the trade idea is pretty, you know, lousy. Oh, that's awesome, man. Good stuff. Good stuff. Good stuff. All right. So, what am I going to do now? Oh, come on. Just give me 1 second. I'm sorry. I got. All right. Things were messing up on me. That's all. Just got too much going on. Too much going on. All right. Who's my favorite rapper? That's a good question. Man, that's hard. That is hard. I don't even know if I could give you like classic rock. Who is my favorite of anything? That would be tough. That's tough to answer. Who is my favorite rapper? Give me yours, and then I will think about it for a minute. I mean, I think, that's hard because, I mean, like, of all time, I don't know. Growing up, I wouldn't say growing up, but, Lil Wayne, Drake, like 10, 15 years ago was a good time, right? It was a good time. Kanye West is good. See, that's what I mean. Like Kanye, it's hard. I can't do it. I can't just give you one. I can't just give you a favorite because there's not one that really just screams, I'm the winner. Drake's talented. Wayne's talented. I was really young. I was young when Death Row with Snoop and Tupac and stuff. Yep. J. Cole. He's J. Cole. Like that's funny. You put them both. Like all three of them. All three of them should. They they're talented. And talented in the way that they write, in the way that they the way they go about it. You don't have a lot of it isn't talent anymore. Even like Big Sean had some tough stuff out. So there's a low volume break. I'm gonna leave this trade alone. Man, this stinks because I mean we're at 229. I'd have to do the math, but the volume is just falling off here now because like I said, man, that trade just fell apart on us. Who was I just listening to though recently? I'm trying to think of who the hell it was. I was listening to some old Wayne a little while ago. Shit. You know who's actually pretty good that has some good stuff out? There's Meta's gonna pull itself back. Where's the spy? Shit. What the hell's his name? I'd have to look. I forget his name. I can't think of his name right this second. Fuck. Let me see here. Let me look it up real quick. DMX was good too. Who who was Moneybag signed under? What the hell? I don't know why I'm having such a like brain fart on this. Yo Gotti. That's who it is. Yo Gotti. Yo Gotti. Yeah, I feel. I like some of that old stuff too. All right, so the SPY just got up to that pre-market low. Let's skip. Let's see if we can find something here. It's 11 o'clock, coming up on 11 o'clock. Man, that sucks, man. I'm so upset. When I'm gonna do another live stream tonight, uh, unless there's nothing really to talk about. But maybe I'll just go up and throw up some charts and stuff later on tonight for tomorrow. Um, but I want to. I'm gonna do it a little bit earlier, so that way I can be up early. It's just crazy. The first day that I did that live stream yesterday, and I come into today, and it's like, it is just too funny. It is just too funny on how I left to what happened the 2 weeks that I was gone. Everything was smooth, and then I do a live stream last night, and then, it's only one day. I mean, maybe I shouldn't be that upset because there's not much moving, so maybe it was so look, bro. There's AMD. I should have bought this pullback here. It was right there. I thought about buying that pullback. That would have been a nice little trade. This thing's going to continue to go. It's got volume. It's going to go. It's going to go up to that 140. It's still got room. I know it does. Alright, let's see what we got. I don't understand how I'm even Nepali, but get close to American in anything because favorite bird is bald eagle. So why don't you just get a passport and move over here? Why don't you just come on over? It's not as great as everybody thinks, but I will say, and this actually goes for everywhere, because every country has its location. Every country has its Miami. Every country has its Monaco. There is opportunity out there. You just got to put yourself in the right places for it. But, the web connects us. He said, "Bro, I'm 16." Man, you don't seem it. So, he said, "Bro, I'm 16. My mom won't let me go." What up, Chris? How you been, bro? I was just making a joke, by the way. But I'm also being serious about it too. What's it like over there? Do you like living over there? Do you have cities and I don't know. Let's see here. Because I've never been there. Yeah, let's fix it. Let's help you fix it, Chris. I've been doing all right. Try and be patient, bro. I know it's easy to say that, and there's a little bit more to it than that. Hold on 1 second. Let me take this phone call. Um, what's been going on, man? What, Chris? What are some things you were trading? Like, give me some names. Give me two names. Give me two names. And let me guess if you were trying to be long, short. Was it just consolidations that was the issue? Not getting the movement? Because you're seeing, like, right now, we're in the middle of a rotation. We're in the middle of a rotation right now between your leaders leading. Okay, I got it. You think you're being a little bit too bearish? This price action is, it's a little tough. Last night, after the live stream, I was looking at this area here, right? Like, this was one of them right here, this 461, but really, like I said this morning, it was like 460, 50-ish, right? For a few different reasons. Right here, it looks different. You got, if I go to different time frames, it'll show itself by using different time frames. Like if I use the 15-minute, that's the first one I started with, was a 15-minute, right? And you can see here, like, resistance, support, it breaks it, resistance, support, breaks it, and then it just kind of bang, and then it retests it. It's kind of hard to see. It's also pre-market highs, right? Friday's highs. So that was an area, 460, 40 area, really was right here. That's where it was right here at this level, right there. You can see those wicks up into it. Gotta be bullish, though. What I'm getting at is, until we have a reason to be bearish, you gotta be bullish. There's money being put to work. Now, up at these levels, you can see that we're sitting up here
against the backdrop of really solid growth. So that overall picture, I think, is very reassuring. It's reassuring to see it come down from multi-year highs and the painful levels where we were, say, last year. But there is this school of thought that's worrying.
Hold on one second, guys.
That how we get from 4% on core inflation to 2% where the Fed wants it to be, and just how stubborn prices are at these levels. Do you worry about that? I'm not worried about that. I feel like
Damn it. Hold on one second. No, it's not on. All right. Sorry. I had to go run out to the door. There's been packages and stuff being left. For Christmas. So the price action's been tough. I can't argue with that, right? We just been in a consolidation. We break out. I would look for this test, right? See if we can get this. I'm still waiting for 458. I'm going to try my hardest to wait for it. I think we don't get a breakout or a breakdown until we get Powell. Until we get like a real reason. We had a little bit of volatility because of CPI. You know, does this start to reiterate? Because I don't think CPI was that bad to where it's like, you know, you got to start thinking bearish because it can rear its ugly head. It's just, you know, your numbers are going to be a little up and a little down, but the longer trajectory is down, right? That's a fact. So far, the longer trajectory here globally, inflation's pulling back. So until we have an earnings catalyst, a credit catalyst, you know, a government shutdown, you know, things like that that can really cause a pullback. You know, as of right now, things are good. You know, things are okay. The government still, you know, at the end of the month, at the end of January and in the beginning of February, you know, the U.S. will, you know, go back over its debt thing. I think they did a deal last summer, and then like there's like bits and pieces that they're gonna I guess revise or do, you know, there's still other ones that they have to work on with like defense spending and stuff like that. So you know, and you can see how this pulled back pretty quickly off of this level. So you're still getting money put to work. You know, chances are we're gonna pull right back into it. But how much of that 15-minute candle here, 30-minute candle is buying, you know? So right now I'm long-minded. I'm long-minded until we have a reason not to be. You know, that reason could come tomorrow. Maybe Powell says, guys, you know, higher for longer. We did the higher part. Now we're going to start the longer part. You know, he starts to reiterate that tomorrow. And, you know, people are already talking about them trying to cut rates in the next 2 to 3 months. You know how quickly that's going to be here? You know, I don't think people give it enough time. Yeah, that's something you're going to have to look at, buddy. I know sometimes they'll do that. Like, you'll have to watch. You know what I would think about trying to do and trying to learn? Because I know you for the amount of time that you've been doing this, you're pretty damn good, Chris. You know, the first year or two, it's sometimes it's not. It all depends. You know, people learn from different people, and people catch. You know, it all depends on how you're able to learn the markets and actually perceive it yourself. You know what I mean? But maybe think about some. You know, I don't know what capital you have, but maybe think about like some long shorts, right? Maybe think about, you know, maybe like doing some spreads, right? Because you can really, you know, have like, I don't know, or just wait and be patient and wait for the days that you start to see that pre-market volume and you have days like Powell. Like when we have Powell tomorrow, if he says something the market likes, you're going to get a 2-day continuation from Powell. The volatility is going to be high, so the IV is going to be high. You know, trading those Friday contracts, but wait for it to settle down. Tomorrow afternoon at like 3:30 after the meeting, things should slow down a little bit depending on the price action. And we'll try to catch a 2 to 3 day move, whether it's to the upside or downside. Aside from that, you know, I talked about it yesterday. You know, the other markets around the world are making new highs, right? The DAX, the German DAX is making new highs. It's not showing it on here, but right, DAX futures. No, I don't know why. So look at that. There's your German market, right? There is some divergence though. Never mind. This was yesterday when I looked at this. What's going on here? That's weird. That's weird. So the U.S. is lagging. The U.S. is lagging. Right? Go to the Nikkei. Let's see here. Right? Look, making new highs. Right? New highs. Look at that, right? It double topped up there, but you're seeing the same, picture here. And we're not there yet. We're trying. We're trying to break out. We still got a little ways to go, but let's see. So we've broken up above. Look at that, 470. You know what I mean? We still got it. That's a $10 move, right? That's a 10 handle move there. We still have some nice room to get up there to 470. But we'll see. I think it's going to come down to Powell. I really do. I think it's going to come down to Powell and what he has to say. Yeah, I would even just like I said, it's not financial advice or anything, but structuring trades that no matter what happens, up, down, sideways, you're going to make money. And you're taking your profit and putting it back on. Right? And you have, aside from that, you have your day trades that are in the middle. Right? You want to like structure like, you wanted whatever kind. Let's say if you had like $500, $1,000, right? Not a lot of money. You go ahead and you even if you go to like names like just trying to get that equity curve up, and like if it's GME or Ford or like just some names where you're taking, it's a bit high, but 20% of that capital, right? And you're getting those breakout days, and you're buying, whether it's you're buying the stock itself or you're buying the option, right? You're getting on to the days that you're to be able to get on those stocks that are breaking out using a small amount of capital, catching the upside on it, not getting overly crazy because of your position size. You're not positioned to be like, on the edge of a cliff because you've positioned yourself like way too big. Take it small so you can stay in those trades and let it work. Say, listen, if it gets down here, if GME breaks down here, right? I want to be. If I say to myself, I want to be. There's a 9 EMA 50-day, right? Let's say if I had volume today on GME, right, to the buy side. Let's say if I wanted to be long, I'm going to say my stop has to be, right, just right in this area. It gets there, I stop out. Even though I have support here, I'm just giving an example because of that 9 EMA. Just having your stops and just sticking to the script. That's one of the biggest things that I worked on or went back to when I took a couple weeks off. I had a losing trade yesterday in ENPH. Sunday night, I came in, and Sunday night I was looking at it, and I was, oh my God, look, it did it. It broke down. Mother sucker. God damn it. That's okay, though, because this is going to give us a trade. Here's a trade idea that'll set up, like, tomorrow, another day. I want to bounce back to that 50-day. I need to bounce back to it to make it resistance. And I'm going to take this trade, and I'm going to try to hang on to this trade for a few days. You can see here, right? Support, resistance. Support, resistance, breaks, support, right? Made it support yesterday, and now it broke it. So now I'm going to look to get a bounce in the 99.92 area. 100 to 99. A dollar area. This name you need to give some room. You know, people are probably trying to short it now, but look at that. That's still technically support. Look, resistance, resistance, right? Resistance, it breaks, support, support, support. And then it bounces, right? It bounces, it breaks back, out, pulls out. You know, it tries to break out, then it pulls back into the 50-day. It was unable to hold it, so I would look for this thing to break down a bit. Not sure how much it's going to go, though. You know, you have the gaps down here. This is a bit of an island reversal, right? Gaps below. So, I'm 50-50 on this. I'm not leaning one way, but just sticking to the script, right? Getting your position size manageable and just taking it slow and keeping it small and having different trades work for you. I'm right now I'm trying to find, which I'm going to work on here at lunch, like what trade am I going to put on for the first few months of the year? What's going to set me up that no matter what happens, I can trade in and out of this thing, whether, you know, with spreads or, you know, just putting on a trade and having a hedge for it. So no matter what happens, if the market goes up, I lose on the hedge, but I'm making it on the way up, you know. It's just we're not in a normal market. You know, it's really easy to say that when you're in a traditional market. Traditional market, TLT and banks don't go up together. Right? They're usually inverse. Right? Look at TLT, and then I pull up the banks. Right? Look, they're both going up. They're leading together. So that's the weirdness that we have. Because usually TLT will rise and the banks will pull back. TLT pulls back, the banks, you know, that's a nice hedge there. But we don't have that right now, right? We've had a dollar we have inflation, but yet we have a really strong dollar, right? Like things are a little weird right now. Hopefully that will change soon. Looks so we're starting to just consolidate up here. So two things with banks. This is a trade idea that I'm kind of waiting on to see what happens. Is if these banks consolidate up here and then make another leg higher. We've rallied. They're going to consolidate. Does the consolidation lead to like a decent pullback, which isn't good, or are we going to be able to, you know, catch along on some of these names? So a few things, just a glimpse into some of the things that I'm looking at and thinking about. What's the meta doing? So like I said earlier this morning, this whole area is a bit of chop. So it could start to slow up with the movement up in this area. Yeah, it's starting to get a little choppy. Is that? I don't know. It's a shame that I was up so late last night. Nothing's really moving, at least for the larger names. Snow is still sitting here. It looks like Snow has a pretty nice bull flag up here. And it broke out. It's like, you know, is it going to break out? That's what we're waiting on. I mean, maybe the markets, you know, things aren't moving because we have Powell tomorrow. Could be a big reason. So like Snow, Roku, I'm still watching GME for that, you know, either a breakout or a breakdown type of day. Man, Roku's still holding this 99.95 level. Look, we get one CPI rating where it's about even and not too bad. I think people are over exaggerating this. I feel like they're over exaggerating this CPI report today. So core inflation rate month over month was 0.3 versus a 0.3, 0.2. So that's right in line. Just a tad above previous month. Year over year, 4%. Right in line. Inflation rate month over month. 0.1 versus 0. Forecasted 0.1. Inflation rate year over year, 3.1 versus last month's last year's 3.2. Right in line, right? It's not Red Book 3.4. We do have a 30-year bond auction at 1 o'clock, so don't forget that. I want to see how that bond auction reacts off of the CPI, right? Maybe that's our next leg lower. So keep an eye out on this 30-year bond auction. If it comes in not so good, right, that could give us a nice pullback. Looks like the SPY is still hanging out up into that area, and it's pulling back now. And the volume up here is pretty nice, right? You're getting some nice volume up here on a 5-minute chart. Yeah, I'm with you. I'm gonna look around. Because I'm still, like I said, I'm gonna try and structure some trades for 2024 and see if I can't get a few trades, like figure out what it is that I'm gonna try and do to have like a 2 to 3 month, like a 3-month type of trade with a hedge that I can just have on and, make 4, 5, 6 times. So it's good to talk to you, Chris. You guys need anything else? Hit me up. We'll get it fixed, man. I'll be on tomorrow, bright and early. We'll fix it. Let's see what you're looking at. I'll give you my thoughts, and you take it for what it is. And it's that. And I think a lot of people trade alone, and it doesn't help them, right? Because it's not like, what do you think? Because it's easy to say like, this is what I think, but to have like another person, another group of people to say what they think. They agree with your analysis. Your analysis is probably right. You want to be neutral. You want to just look at a trade and say, right, like, here's my sellers, here are my buyers. But, you want to say, I've got 4 things to be bearish, I got 2 things to be bullish, or 1 thing to be bullish. It's probably you're probably right on taking the short. So yeah, I mean, we could get some news that could come out at any time. I don't think we're going to get much until you get this 30-year bond auction. And even then. But yeah. So I missed Tesla yesterday. I missed it today. Today I know why I missed it. I wonder if we get a double bottom here. Look at the volume starting to decrease on this second pullback. So let's see if we can get a bounce. I'm looking to see if I can try to get a bounce back to 240. I am. I don't know whether I should take it at the 50-day or if I should take it at 231. If you get a bounce off of 231, my feeling is that you would start to turn that 50-day into resistance, but it didn't do it here. Didn't do it here. Didn't do it here. Didn't do it there, or there. The only time it hung around the 50-day were these 2 days. And it kind of, you could say it made it support there, but this thing's just trading in its range. But I think now with it being stuck between the 50 and the 100-day, we're going to get a breakout, right? One way or another. Once these moving averages start closing in on one another, it's only a matter of time. And we had that right back here. We were live this day, and I said it right here. You see how it got squeezed in between the 50-day and the 100-day? See how it's getting squeezed? Boom. Right? You get that blast off because you get shorts to cover. The 100-day didn't break, and you get longs to buy on top of it. Pulls back, tries to break out, fails to do so. And I think that's a big sign there at that area. It's actually kind of a head and shoulders, kind of, but not really. I think it just looks to me like this support, like this level here, right here up at this level. I wonder if if this is just a bigger picture retest. It just can't get up above it, and we're in a longer term downtrend. If this is the start, could be the start of a pullback. The market's up at highs. The overall markets are up at highs. Other stocks are making like highs. They're working their way up. Tesla is just lagging horribly. Excuse me. So, bigger picture. I don't know what it's going to take to get this thing to start moving. I don't know if there's anything coming up, like any events coming up other than earnings. Earnings aren't for a while, but so let's go look at the scanner. Let me type in, see what this stock's still doing. And look, the trade fell apart, guys. I told you that I felt that this thing was going to fall apart. It had a really nice setup, and the traders fudged it up. They messed it up. This would have been they tried to break it out too. It broke out that 100-day too early, and it took traders away from it. It took me away from it. If it takes me away from it, I know it's taking other traders away from it. Right? I had an order set. It started to break out, and I said, no. I got to walk away from this one. Right? So, stuff like that comes with time, right? And I could be wrong. But my whole point with this is you had a really nice setup. You broke through the highs on an increase in volume here. Like, this is a really good lesson on why this didn't break out. And I called it before it didn't break out that I thought the chances of this breaking out now are probably slim to none. Not that I'm not saying that the trade is done, but it's just in this moment in time this morning that it is when it didn't work because of a few different reasons. Because it tried to break above the 100-day too soon. And it just, the volume left because you have people down here at this level at 211, 212, 213 putting their buy orders, because what I'm getting at is the stock pushes and it breaks above pre-market highs and initial morning highs on an increase in volume, right? Boom, boom, right? That's the highest volume of the day on a break through the high. So that should tell you that should hold as support. Even on the 3-minute, that break is the highest volume of the morning. But then it gets up there and it kind of just stays up here. And it's trying to hold the 100-day, and it tries to break the 100-day, and that's what did it too soon. For it to be a nice pattern, you wanted to see this 100-day. You wanted to see the stock pull back off of it, right? Pull back off of it. Pull back to that 211, 212, 213, this area right in here, and then you had the 90 MA all right there. That's where all the traders were. But no, they didn't let it pull back. They continued to buy because they just seen it breaking out, not knowing like, hey, on the daily chart, you have a 100-day moving average right there. Let it pull back off of it to bring in more buyers that are all sitting here waiting for the pullback We just saw the breakout on an increase in volume. We say, all right, we should get a pullback on the 100 day, because when you have major moving averages like that, you're not going to break through it the very first try. So in order to really break it, you need liquidity. And in order to get liquidity, you needed to get that pullback. Well, it decided not to pull back, and it stayed up here. Right? It stayed up in this area, and now the 9 EMA at the time was down here. Right? It's way down here, and it's just up here on no man's land, and it tries to break it. And then that's when everybody that already was long took profits. Myself said, okay, I'm taking this order away, because I had orders sitting down here to go long. Because of that breakthrough, I'm like, okay, they just messed this whole trade up. Now it's done. Look at the volume. There's no volume. And when you did that, look at the volume on this 3-minute, where the volume just totally leaves. It leaves. Because they're not buying up here. We want to buy down here. And we had the 9 EMA. It was a perfect setup, and it got ruined. So now you have traders that are gone. And then whoever didn't get out, didn't pay attention to what was going on up here, you had that extra break, and look at all of them that got short and sold. So if it holds in this area and holds above VWAP, maybe it's a long in the afternoon. But after that, in real time, I went through the trade and gave reasons why I thought this trade was no more. Because the setup just completely got demolished. So if when you're in trades, try and say to yourself those things, like even if you gotta say it out loud. I said I want to see a pullback. I put my orders here. If I'm doing it, I know other people are doing it. Right? I know other people are doing it. I don't think you had enough of a catalyst to break that 100-day moving average. The 100-day moving average is this blue box, to break it on the first try. And it just got sloppy. It got up here and it held, and then that's when it got sloppy, and you had traders just move on. All right? You just had traders move on. Tried to do too much too soon. And now my orders aren't getting filled. My orders aren't there anymore. And that doesn't mean that it's a short either. It doesn't mean it's a short either. I would say 190. To see if 190 is going to be able to hold. That's where I would look to see if it holds to maybe take a long in the afternoon into after hours. Or at least, again, this is what I'm looking at for myself. I would see if you could hold this area here at 190. 190. See if there's anything there. Yeah, 189, 190, yup. $186. All right, so you got a little bit of a 15-minute bull flag here on Meta. What I'm going to do here in a little bit is let's go through and see what were the, see if we could see any type of rotation today. It may have just been a quiet day because of what we have tomorrow, because of the fact that we have Powell tomorrow. You probably don't have much money being positioned until you get the information we're waiting on tomorrow. It wouldn't even be information we're waiting on. It's just, just hearing from Powell to kind of decide how are they gonna buy it at highs, or are they gonna sell the high, or or not put money to work, I should say. because you still supposedly have a lot of money still sitting on the sidelines. But I always, like with my family and stuff, I like even friends and family, anybody, I would just always buy. It's whether the market's going higher or lower. You don't want to just buy the highs, but you can, because if you buy the highs and if your time horizon is, you know, years down the road, it's probably not going to mean much. That new high is going to be a prior low, right? So it is crazy to think. I'm like, just it's insane. The opportunity that was had that, like, I feel like a lot of people missed out on. Let's look at Apple. I'm not sure what you should do. I could tell you what I would do. I know AMD is wild. I was saying that this morning, that it's going to go to 140, 145. What do you mean should you sell to 150? What are you saying, a spread? I'm not sure what you mean. The put? Unless you know what, your prices might be, no, they shouldn't be different than mine. I don't know, with the currency and stuff. Yeah, I think AMD's headed to 145. Hey, listen, this morning I wanted to go long AMD. I wanted to buy this pullback right there, and I didn't do it like an idiot. Because you have all this volume. This is a momentum trend type of day. And, once you see them, you don't forget them. So if you see this from another stock and you think it's too late, like the trajectory, right? Look at it. It's going like at a 45-degree angle, I guess you could say. Whatever that angle is. It's going top right, right? And the candles are the same size, right? These candles are about the same size on a 2-minute, 3-minute. So it's showing you that these are buy triggers, right? From institutions. And this thing's going to 145, 140. That's the target, 140, 145. I said it this morning, and I wanted to take the long right there. I said it, and I didn't do it. I was kind of waiting for a pullback, and I was talking, but that's a trend continuation, right? Notice how the candles are the same size. Next time you see this on a stock that's strong, don't be afraid to get it, right? Look at the volume, consistently high volume. It doesn't fade out, right? And that's what I liked about it. The volume wasn't fading out. It was just consistent. So, it may start to do pullback things like this. I think this thing is still just going to grind. It may just consolidate up here for a minute, but I see this thing just going. I think it's still going. Oh, 150 profit. Unless if you need the money, that's up to you. I can't tell you what to do. Personally, I wouldn't. I wouldn't just yet. I don't know. It's all, that's something. I legally can't do that. I just don't want to get in trouble. You know what I mean? Me personally, if I don't have a reason like of need because I need some money for something, I wouldn't. I don't know where you're in. There's all kinds of questions. If it's a day trade, and you're just, you got calls or something, then absolutely. Absolutely. You got to take your, you want to just take it as it gives it to you, because look at the SPY. It's not, actually the volume's decreased on the SPY on these pullbacks. I've got a 5-minute chart up, and that pullback is actually low volume. It's like consistently lower, even though it's, 11:30. The volume on these pullbacks have actually dropped. So let's see what happens at 1 o'clock. But if it's a day trade, absolutely, Ammo, I would take it. You got to, because if you don't take it, the market's going to take it for itself. Yes, AMD though is a beast, man. Fuck, how did I miss that long? I didn't miss it. I said it. I literally pulled it up and said I would like to get long at this pullback. And it was those two candles there. It may have been here. It may have been right there, like 10-12. So here's what we do know, like Meta, right? And I think you're seeing it for AMD. Like you have these bounces, it pulls back and it goes long. Pulls back, long. Pull back, long. And look at this, right? It's a long pullback. You get a long upside. It's getting bigger. So, I mean, honestly, man, this thing has got room. It's got room. It really does. It's got room up here to 140, 139.50, 140. I feel like if we're able to get some kind of pullback, I'm gonna take a long on AMD if we get like a nice pullback, because I think you could lean on this for a few weeks. I mean, this is crazy. It's not crazy because what it is, it's a, you know, you just have to understand what is at play right now. Institutions want to own this, whether they have a 5-year, 10-year target, they want to own it. It's going to new highs. It will be at new highs. So you're just getting a continuation in buying. And if I bring up Meta, you could have leaned on Meta for the same thing for like 2-3 weeks, right? I mean, this was just month after month. But I feel like with AMD, you could get this type of, you know, where you're able to lean on AMD for the long for a couple weeks. That's just my personal opinion. I really think you're able to do that. That's what I'm going to try and do. If I am able to get somewhat of a pullback, I'm going to just lean on the long and just take this thing to new highs. I'll get some time on it. You know, I'll buy 10 contracts at a time, and if it works, you know, I'll ride it out till it doesn't work anymore. This is a breakout of that pivot high on an increase in volume, and it's just exactly what it is. It's institutional buying. They want to own this name. And something's physically changed about the company with their GPUs, or CPUs, whatever they are, that makes them want to own it, right? So if for some reason I am able to get a pullback, if we're able to get a pullback, I'll let you guys know if I put that on. Man, that sucks. 'Cause I should have just taken it when I was on it, but I was too busy worried about Meta and Tesla. Alright, let's go through some of the names that I've been watching. Some of the stuff that these people say on CNBC is crazy. It's absolutely crazy. I wonder if GME is going to pull itself back and it holds this level again if you start to see this thing try to break out to the $16 level again. It just needs volume. Doesn't have that right now. So Meta, I'm waiting for 327 to see if it can pull back and hold that area. You know, it's kind of got two areas here. It's either 326 to 327. It's like $1 range. That volume has fallen off. It's fallen off a cliff. I wonder if that sell volume is going to peek its head back in up here. I'm so tired of this commercial. See the same commercials on CNBC day after day. Oh, guys, ARM. That was the other one that I didn't write down last night. Okay, so ARM is still holding that level. Thank goodness. So we have a decision to make, right? Look at this level. This level here is key. $64. Let me go here. All right, this is a key area. It seems like it's not getting enough volume off of it, like it wants to hold it. So I feel like it breaks. I do. I feel like it breaks. It looks like it's trying to do that now. That's a nice double top up there from early this morning. Tested VWAP, which was prior support, and now it's just pulling back. Damn it. Look, I might have just found something. I might try and put this trade on. I may try and put this on, guys. And see if I can hold it for a day or well, we have Powell tomorrow, so that's going to shake things up. I don't really want any positions going into Powell. Let me take a good look at this. Because really it's 64 flat. Look, guys, look at it go. Look, we just oh my gosh. That's hilarious. It went right to it. That's so funny. That's hilarious. That would have been a beautiful scalp. Look at the volume there, guys. Look at that volume. Beautiful scalp. Now, let's see if we can get a bounce back to that 9 EMA. And I'm going to put this on. That's some nice volume there. All right. It's not going to give it to us. I agree with this guy. I agree with this guy. Come on, give us the bounce back, baby. Give us the bounce back. What's the SPY doing? I'm gonna stay strict on this trade that I am not taking this trade until I get that bounce back up to this area. I may even want to wait until it gets up to 65. Just don't know if it's going to give it to us. That was a beautiful trade for anybody that's in it. That's a beautiful trade. I forgot about it. I did not write it on my list either. I wrote down Roku, Meta, GME, Adobe, Oracle, ENPH, Tesla. Well, you know, just some things that I've been looking at that I didn't want to forget, that I didn't talk about last night. So, let's see here. I'll show you guys what option I'm going to look at. I'm thinking about the 63s. There may be support here, too, at 60. 63. So that'll be an area that you're going to get a bounce. Yeah, 63. Well, there's a continuation, guys. They're getting rid of this thing. It's not giving us the bounce back. Damn it. That sucks. I want this 9 EMA. On the one, at least on the 1 minute. I'm going to be patient. If it goes to 63, it goes to 63. I might do the next week 62s. I might do the next week 62s. I may do that. That's actually where I may go with. Let me see the volume on them. This guy on CNBC is hilarious, by the way. So that's a real nice bounce off that daily 9 EMA. Look at the volume increase. It feels like I had... No, never mind. Man, that sucks. There's not much liquidity on this name. Yeah, it looks like, see, that's the battle we got to fight here, is the open interest. Today's what, Tuesday? If you can get, let me look here. Hold on, let me see here. So you have a high and a low of 61, all right? And we're at, I guess, wait, no. Is that for this week? 88.94. Did it, what just happened here? Hold on. Hold on. Okay, now, bid ask 112, 120. Okay. Why is that not higher? Oh, because that was the last fill. So be careful with these. So where's the volume at here? I want to see the volume. I don't know how to use Thinkorswim that well. So this is up 44, 50%. I just want to be able to see the volume for these. Sounds like Biden's flying over. All right, so there's our bounce back. So now the question remains. That's a low volume pullback. All right, I'm going to go for this week. Damn, they got filled there. I'm going to throw in some limit orders and see if I can get a fill here. Let's see. I'm going to try and get a limit order on the 63s. Hold on. Do not market in these. 76, 82, 75. I'm going to try for 75 cents. Let's see what happens. I feel like you're going to get a bounce here. I'll let you guys know if I get filled. Got a 15-minute trade line's way up here. So this thing could bounce, guys. This thing could bounce. Just give it a minute. Give ARM just a little bit if you guys are looking at this and thinking about trading it. Give it a little bit because we could see a bounce back all the way up here to 64.50. We could get that. I'll let you guys know if I get filled. God damn it. Now the bid is at 75. That's where everybody's at. They want in. Yeah, now it's like, so you got to worry about being able to get out of this name as well. All right, getting in is one thing, getting out's going to be the next. So I think this was the last fill, was at 97. Somebody just bought the bottom to that. That sucks. It sucks. That's a daily trade line you're getting a bounce off of. Come on, give me a fill, please. Come on, give me a fill. Everybody's sitting on a bid. You notice how it hasn't moved? So now I'm not going to get a fill because now it's higher. I'm going to be patient because I still think I could get this. I may try to take this to 70. Let me see. Because I think we could get a sharp bounce higher, and that may bring the bid and ask way down if it bounces pretty high. Right? You know VWAP is your area of rejection. This thing could go to like 60 some cents, so I just put it in for 72. No, I'm going to stick with my gut here. I'm surprised that there's not more liquidity in this name with the amount of people that have been watching this. I didn't know that it was so illiquid. I guess because people are just buying the equity itself. And this thing, I think this could be a fun thing to trade if more people. So here comes the 3-minute trade line. Here I am sitting at 70 cents because I think you'll get a bounce. I think we could get a quick bounce. I don't know if it's my computer or if the things, it feels like it's slowing down. That's gotta stink, man. I wonder when this is going to change. It says here it's still 97 cents. That's crazy. I don't know how this isn't getting filled. Like, it isn't changing. It should be going lower. It's like, is there like nobody getting filled? Is nobody getting filled because they're bringing down their bids? Because they're thinking exactly like me, right? That we could get a sharp bounce and you could see, you know, the bid ask. You could see the bid down to like 70, 65. If you get a quick bounce. Spread is tight right there. It was at 82 to 76. That's about the tightest we've seen. At least on this option. 63.50s are pretty... No, they're not tight, actually. I think this is where you want to be. The 63 weeklies, from what the little bit that I looked, is what has the most liquidity. I might go make a bagel here in a little bit. Man, we were we were on that thing. Holy cow. Somebody trying to sell it for $2.08. That's hilarious. That is hilarious. I still think 70 cents is a bit pricey because of that quick move, and, you know, 63 put at 70 cents. You got to get down to 62, what, 62.40, something like that, or 62.30. So I may cancel that order. There's not any volume on this name. Doesn't seem like there is. Yeah, there's not any volume there. Okay, I just wanted to make sure my AirPods were on. I'm sorry about that. Whoa. So I'm gonna go look at some of the news that was covered early this morning, so I can come up with some trade ideas. I'm going to cancel this ARM order because I'm not getting a pop for it. I want to wait and see what happens. I want to be able to live and know if I'm in an order or not. So it's got to test VWAP in this area up here. You got your 15-minute trade line in the way, so I would look for it to bounce here. So, yeah, there's your 15-minute trade line trying to work itself up. Let's see what happens. Maybe I'll just leave it on. But uh-oh. What is it? SW. ITCI. Okay, so there's a buyout here. All right, guys. There's a lot going on here. I don't know if I had the mic on or not. All right, so now you see that the bids are coming down. So somebody got filled at 82 cents. There's somebody there that got filled at 82 cents. I'm starting to think I'm going to try 68. See, I'm going to start bringing these...
Victory over Google, free Fortnite, and the ruling quickly became a sort of rallying cry for others interested in cracking this duopoly. And Neil Dash, CEO of Glitch, writing on Threads, the app stores are cracking open. We're about to see the biggest
It's a big blow to Google and the power of its App Store after this federal jury found that Google turned its Play Store and billing service into illegal monopolies.
Because I still think you're going to get a nice pop here, and I don't know what that's going to do to the bid and ask.
Hey, Carl, good morning. So for years, the tech giants, they have argued that their App Store rules and restrictions, they exist simply to benefit customers. This ruling chips away at that argument and challenges the idea of Google and Apple as gatekeepers. Epic CEO Tim Sweeney, he posted, victory over Google, free Fortnite, and the ruling quickly became a sort of rallying cry for others interested in cracking this duopoly. And Neil Dash, CEO of Glitch, writing on Threads, the app stores are cracking open. We're about to see the biggest reshuffling of power on the internet in 20 years. Meanwhile, the American Economic Liberties Project posting, the ruling's a big deal. The jury was readily able to call a spade a spade. And then there was Luther Lowe. He is a longtime critic of Google with Yelp and now leading public policy for Y Combinator. He posted, both major Google antitrust cases this year put as much spotlight on Apple's bad behavior as they did Google. Apple, he says, is next over the barrel. And I'm going to be sitting down with Luther shortly to discuss the implications and what's next. Don't miss that interview coming up on Power Lunch. Now, the immediate implications are uncertain, and that's probably what the stock is reflecting, down less than 1 percentage point today. The judge in the case will decide on appropriate remedies next month, and Google has said that it will appeal. But it's not just the ruling that has the potential to damage moats here. It is the months of litigation that has revealed far more about the Google and Apple ecosystems than either company would like. Throughout the Epic trial, we learned that Google saw Epic Games as a contagion threat that could cost it $2 billion in revenue. We learned about secret deals between Google and Spotify.
Google and Netflix and others, essentially destroying this notion that it treats developers equally. Epic versus Apple, it was just as damaging, even though Epic lost that one. We brought you an example yesterday, emails that revealed Apple decided not to integrate Android messaging to better lock in customers, protect that walled garden. Now, all of this amounts to an airing of big tech's dirty laundry that is now out there, guys, and could and likely will be weaponized by regulators, startups, rivals in other battles that are on the horizon, like the much bigger search antitrust suit that will be in focus next year that Google will have to face. There's all of these sort of arguments and secrets out there that could be used in that trial.
So if Epic ultimately prevails, even when Google challenges this, what sort of changes will Google have to make?
Put that in the uncertainty bucket, right? The judge in this case has said that he's not going to tell Google how much of a percentage fee it can charge for its app store. So we don't know yet. And I mean, when we look at sort of the history of antitrust regulation in the U.S. and how it's affected big tech, the answer is not much at all. Europe, as you know well, Sarah, has been more effective in sort of enacting some of this change. But I would say this year we saw a little bit of a shift. We see these smaller companies winning more battles, regulators moving a little quicker, even if they haven't actually won anything. But it's going to be a big, big test next year when some of these larger suits with the FTC and the DOJ come to trial.
All right, Deirdre, thank you. Deirdre Bosa. Well, we've been following the fallout from the recent congressional hearings on anti-Semitism at colleges. An update just days after University of Pennsylvania President Liz McGill resigned. Harvard's board now out with a statement this morning in support of President Claudine Gay, saying, quote, "We reaffirm our support for President Gay's continued leadership of Harvard University." That's despite, of course, her heavily criticized testimony at the hearing where she struggled to clearly say whether calling for genocide of Jewish people violates Harvard's code of conduct. She said it depends on the context, like the other presidents there. And now I think at CNBC, we followed the money sort of on this story of what the donors do and some particularly vocal, I think, activists calling for her resignation and calling for some sort of reexamination of moral clarity and DEI policies at some of these universities.
Yeah, definitely an examination of the donor base at Penn, for example, versus Harvard, and whether or not that changes the outcome. We'll learn more about that in the months to come, I imagine. Let's get to the half ahead of the Fed tomorrow.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Inflation, the Fed, your money, a critical 24 hours ahead. We'll debate it with the Investment Committee. Joining me for the hour, Josh Brown, Shannon Sakosha, Jenny Harrington, Steve Weiss. Let's go to the markets. We do have some green across the board today. There's the Dow, S&P, NASDAQ, all higher. The 10-year yield is about 422, 423. You see it right there. So, Weiss, we got through CPI. We got over that test. Now comes the Fed, the biggie.
Yeah,
what do we expect here?
I think there's a bigger one. That's PPI. The Fed's going to say what everybody expects them to say, which is that we're holding rates where we are, not being as hawkish as they were a couple of months ago, or 6 weeks ago, but at the same time not saying we're going to ease anytime soon. So CPI pretty much thread the needle, not too hot, not too cold, so it gave the market what it wanted. And so I think you look to tomorrow and hope to see PPI is the same. If that's the case, then I believe that we can rally through the end of the month. Otherwise, I mean, that's a binary event.
Just the end of the month or beyond? Because if you do, you still have the Goldilocks narrative being, discussed. And if PPI comes in favorable and the Fed does what you say they're going to do, then why couldn't we rally for beyond just a few more weeks in the calendar?
We could, but here's what may get in the way of that. So you've seen major gains in the mega cap technology stocks. People may be waiting to sell those until after the first of the year so they can delay paying taxes for at least a quarter. But I also believe once you get into earnings, you'll start to see companies tell a different story, not be as optimistic as they were. Earnings estimates, I mean, generally you always see estimates being beat by about 75, 80%.
I took that arm off. I took that order out. Just because I want to wait and see what happens. I don't want to be sitting in a trade that, I just don't like how the options are trading. This stock should do better. I feel like it should be better. Somebody got a nice fill there. With the amount of open interest and volume, this thing should have a tight... It's not even about the spread. It's just like I don't see anybody getting filled. Or unless all these people are getting filled at like 84. Like you sat there and seen somebody sitting at 92 cents while this thing was trading well below 92 cents on the bid ask. And they were sitting there for like 10, 15 minutes. Just like nobody getting filled. So... yeah. I might think about just doing the stock itself. This could be a clear area right there. I got a bagel cooking. Got a bagel getting toasted. So I will be right back in about 2-3 minutes. And yeah, that's that. So that order is taken away. I do not have that order sitting there anymore.
And coming into 2000 was going to be the savior, was we were going to see a surge of economic activity in China. We didn't get it. Payrolls, fine. They're fine. People are employed. There continues to be strong data.
Well, payrolls are better than fine.
They are not.
Payrolls are better than
They
fine.
are not as bad as anticipated.
Not even
However,
close.
we have seen a 0.4% tick up in the unemployment rate in this year, Scott. It's not like we're sitting at the same place we were in the job market earlier this year. We talk about the number of job openings. You and I both know that that JOLTS number is still unnaturally high. Those jobs aren't out there. They're just sitting around waiting for the perfect candidate to come in. More importantly, the transmission of interest rates, of higher interest rates, has not fully transmitted through the economy. We have sat here for all year long talking about inflation and the Fed. Inflation and the Fed are no longer the story. Interest rates are the story. We have not seen disruption in the credit market. We have not experienced companies that were over-levered having to now refinance at higher rates, which, oh, by the way, are not coming down. And certain parts of the economy, such as the housing market, are not going to rebound overnight because affordability remains a challenge. I'm not saying that we are going to slip into a deep recession, and that is not our view. A neutral equity stance, Scott, is not a negative equity stance. It means that we believe, particularly in the first half of next year, that there are going to continue to be economic slowing.
You didn't like that question,
I
did
love
you?
how much she
Did
knows.
you?
That was great. I was captivated.
I mean, it's not, you know, I'll tell you that. Jenny, how do you see things here?
I see them exactly the way Shannon does, but with a different spin on it, which is interesting. So I wasn't sure where you were going to go when you said neutral, and I was thinking the same thing. I'm like, neutral isn't negative. But where I think we are is, I don't think that the rally is necessarily...
Positive. It's not positive.
It's neutral. You're right. It's not positive. It's also not negative. It's neutral. And so where I come at it, if I were to say I'm neutral equities too, I would say, all right, here's where we are. Maybe we get to $250 of earnings on the S&P 500 next year. That's a hope and a prayer. That's plus 11% year over year. We're seeing nothing so far from earnings that would suggest that you're going to grow.
Why is
11%.
that a hope and a prayer?
Because we've seen nothing in the fourth quarter. To Steve's point earlier, when we get into earnings that we get in January, I don't think we're going to see a lot of really great stuff out there. It's just a, you know, we're coming off of this distortion of the pandemic, and we're just getting back to kind of normal, but that's not enthusiastic. That's not, I don't know, I can't be enthusiastic about it. So let's say we get to $250 of earnings. Let's say we put a 19 times multiple on it, which I think is aggressive. That gets you to 4750 on the S&P 500. That's plus 2% from here. That is uninspiring. That puts me at neutral. Like, you know, less macro-y, kind of more earnings-based valuation, but I can't get to anything that's inspiring. Now, you know, you can go into other areas of the market, right? Like if we talk about dividends or value or small cap or international, you can get enthusiastic on individual parts. But broadly speaking on the market and equities, like, you know, what I keep telling my clients is we need to remember that from 2011 until 2021, the market returned an annualized 16.5%. Over time, the market returns 8 to 10. We are still working off of that sugar high, and we're going to be working off of that for a long time. And one thing that really bugs me is when people kind of complain about the flat 2 years we've had, because we were, down 18% last year, up 20% this year, and everyone's like, boo-hoo. I'm like, yeah, but you know what? You need to consolidate the returns. Like, no one was crying it up 16.5%. That was the greatest thing ever. Like, it wasn't normal. It shouldn't have sustained. Be happy with neutral.
Josh, are you better than neutral?
All right, I'm back.
Where...
So I said this yesterday. Well, I mentioned it in the
I am
comments
better than
section.
neutral.
Let me
I am better than
refrain
Ezra.
from saying I said this because
I'm doing
I didn't
okay.
say it.
Listen,
I commented it in chat yesterday.
Here's the obvious to me.
And
It
that
might not
is-
work. I just think it's very obvious.
And that is, we're running up onto the 18 to 19 time multiple on the S&Ps. And each time we've done that, that has been our area of a pullback. And you're starting to see, I think today was a glimpse, not a CPI, but of a multiple, probably, where you're seeing, look up, like we're starting to sell off from here. And I commented that yesterday. I'm going to show you. And I think I pinned it on the tweet. It was on last night's live stream. And that was something that I forgot to mention in chat. Or, you know, I forgot to mention it on the live. Was to take notice of that area. What do you watch tomorrow? I forgot to mention S&P 18 to 19 times earnings is where she has had her pullbacks. We are about there now. So, yeah. I'm going to eat this bagel and let's watch some CNBC.
There's those types of stocks that are meaningfully breaking out. But that's not all, as they say. I want you to look at the DAX. Germany is breaking out 10-year highs. Look at Japan starting to break out multi-year highs. You're seeing small caps act well. You're seeing industrials act well. It is very broad-based. And so I think the obvious thing going into next year is anything but FANG. Like, there are so many sectors right now that are breaking out, that look good, and you don't have to pay absurd valuations. Just very quickly, basic materials, 8.5 times earnings. Energy, eight times earnings even. Industrials, 15. Utilities, 11. The whole market is not as expensive as perhaps Apple at 35 times is. There are a lot of other things that we could focus on and look at. Does that mean the S&P nominally will repeat this year's performance? Probably not. Doesn't mean you have to have a bad outlook going into 2024.
I think I want to point out something that Josh just said, because I think it's really important that people understand this. Mm-hmm. When we talk about equities, when we sit around on this panel and we talk about building portfolios, we're talking about more than just the S&P 500. And I think that may be lost sometimes in the conversation. So if you think about how you're positioning, if I, for instance, am neutral equity, I have exposure to the small caps. I have exposure to international. I think that there are opportunities. I think that the set it and forget it trade that has been in place this year, where you could just buy the S&P 500, or more importantly, just buy the Qs.
Well, that's not. That was good through the fall, but that's not been the case
over the last
since
2
November.
months.
But so what?
That's 6 weeks.
So what?
So we need to have evidence that this broadening out is not just as a result of people trying to position into year end. We need to see.
But the people who didn't want to buy the mega caps as they were rallying, well, we need, let's see more evidence that it's just not a AI fueled bubble.
Everybody has the mega caps. Everybody has exposure to the mega caps.
Not me.
Right? I mean, I'm trying to figure out.
Overweight.
I'm trying to figure out,
the only way
what
that you
more.
Outperformed is that if you were overweight those names, Scott, and those are huge positions.
I'm just trying to figure out just what more do the Bears, what more do the Bears want? Like, at some point, you say, okay, soft landing looks likely. Fed's done hiking. All the doomsday scenarios about, hold on, what they've already done are not going to come to fruition, because this time was different, because the mattress was so thick when the Fed started doing all of this that the negative cries for the last 12 plus months are going to all fall to the side. And people are going to realize that it's actually not such a dire scenario, Steve.
I don't think we've necessarily played that game to fruition. As Shen said earlier,
we might not have. I'm not suggesting that we definitely have.
It's taken a long time for interest rates.
But isn't the bear case getting tired?
Well, look. Yes, the bear case is tired because it's been.
And I'm talking to a bear.
Right. Well,
you were a bear.
I was a bear.
You were.
I was a bear.
Why aren't you now?
Well, it served me well last year, right? And this year, I've actually done well because of my positioning, to your point. So I still see more negative catalysts out there than positive catalysts. And I'm not sure everybody sees that. I don't necessarily see a soft landing. I don't see the bank issue being resolved. Okay, because we haven't had
what, the regional bank issue?
The regional bank issue, but also so I spend a lot of time in private markets. Do you know how many companies are just not getting funded, going belly up? Do you know who owns a lot of that debt? Not just SVB, okay, but this massive private credit bubble that we have. That has not been played out. And I think that there is significant risk to that bubble exploding. It doesn't have to explode broadly, but I think it can get, if you let some of the air out, that's pretty negative, because that's where the lending has come from that's powered the economy. It's not come from the big banks. And while the regional banks have been lending for real estate, for multifamily,
you could say he's either right or he's wrong.
Weaken somewhat too.
The Fed is right there with that cash money, baby.
Private equities
straight cash.
It's extraordinary.
Powell,
look at what's
straight cash
private equity
to the
in
regionals.
China.
They
Now,
need
we're
money.
not China.
This
I
is
don't
your
expect
chart.
that.
They've been wanting more and more and more and more, and they've
and to
been
think that
receiving
clear
it.
sailing ahead because the bank crisis behind us is sticking your head in the sand.
But maybe, Josh, it's just simply
it's getting
back
higher.
to just don't fight the Fed.
There's still trouble.
Don't fight it when it's hiking. Don't fight it when it's done.
But you have to have one more point before Josh talks. Sorry, Josh. You have to make the bet that a massive rate hiking cycle will never hit the economy. Okay, that's not the bet I'm making. That's not the bet you're making. All I'm betting is because of that fat mattress you referred to, that it's just delayed. And one more thing, the labor participation rate has picked up. It hasn't picked up because people said, hey, I miss going to work every day, particularly for the jobs they're coming back to. What they're saying is I've run out of cash. So on one hand, it's positive because you'll keep now wages, hopefully you'll keep a lid on it. On the other hand, I think it's an indication of what's happening with the consumer.
Josh.
I think one of the most remarkable things about this cycle that very few people would have predicted, and many people are still in shock about, is that we might have short-circuited a potential recession by being so hyper-aware of the potential for a recession that we the colloquial we battened down the hatches before things could get out of control. There were CFO surveys. Duke University does a CFO survey in 2022 where CFOs were universally answering that they expected a recession. We had these mass waves of layoffs in media, in telecom, in technology throughout 2022. And then we had this earnings recession that started in Q4 of 22. We had earnings fall yet again in Q1, yet again in Q2 of this year. And then this past quarter, the third quarter, earnings were actually 5% above Q3 2022, thus ending a three-quarter earnings recession. That's the reason to make the turn. Like, if you ask me, like, how could you say soft landing? It's not that we'll never have a recession. It's that we very well should have had a recession. But two things happened.
Maybe we
The first is people got really cautious.
We did have
Maybe we already
recession.
did.
Well, we definitely did in tech. Silicon Valley, look at valuations in pre-IPO startups. 100% they had a recession. But
you
the
told me
bigger
that
picture is
manufacturing
we
didn't,
got
industrials and things like that. Maybe we did. It was hiding in plain sight.
I think we saw that. So you had an earnings recession. The bears were right. The thing is, the stock market anticipated the 2023 earnings recession in 2022. That's what that sell-off was about. Okay? So we did that. The second thing, now that we have earnings growth, the second thing to worry about is, did we do too many rate hikes? Okay, maybe. But if you listen to people like Dr. David Kelly at JP Morgan and others, and they have been consistently right about this. The overnight Fed funds rate is just not as powerful as maybe it used to be in a more industrialized economy, number one. And number two, there was so much stimulus in the system that it preemptively stopped there being some sort of credit event. People just did not stop spending. Don't listen to my opinion. Simply look at how the consumer has behaved this time versus any other time we've seen rates go up this fast. So that's where we are. It doesn't mean it'll stay this way, but honestly, we keep saying, well, sooner or later, fine. In the meanwhile, there are things worth investing in.
Yeah, and our CNBC Fed survey, perfectly timed, of course, by Steve Leisman, who joins us now, our senior economics reporter. So this shows that we're looking for cuts next year, and it shows that we're looking for a soft landing. Are these cuts because they can? It sounds like it, not because they have to.
Yeah, I think that the group is bringing down the funds rate along with inflation. That is the forecast. What we have, we've got cuts in the cards, and we also have, by the way, S&P 5000, Scott, but I don't think anything is happening as quickly as perhaps the market wants. I'll just give you one screen here. This is the Fed expectations. Nobody thinks they're doing anything tomorrow, of course, but our survey shows that more than half look for that first cut in June 2024. The futures market, of course, has 79% probabilities by May, about 40 or 50 by March. 453 is the year end. The futures market is down towards 420. So 85 basis points of cuts built in, not the 120 in the futures market. And then we asked for the first time here, Scott, when might the Fed end QT, which nobody's really talking about, but November 24, with respondents basically all over the place on that. And just one commentary I think worth putting out. Peter Bookvar, a guy we all follow, one of our respondents, says, I still believe that Powell has the memories of the 70s in his mind and will be more stubborn in keeping monetary policy tight for longer than the market wants him to be. I'll leave it there, Scott. There's a few other screens we could maybe go through, but I think that's the important thing, is that this group's a little bit slower. I think they're maybe a little bit more attuned to the variability of the data, whereas the market, at least the futures market, seems priced for perfection. Today was a good example of that, I thought. And I wonder if Weiss knows just how smart he is, because when he points to that PPI tomorrow, we normally wouldn't make a big deal of it, but because so much of the PPI reflects the difference between the PCE and the CPI, that's why we're going to watch the PPI tomorrow so much, because it's going to tell us more about the Fed's preferred inflation indicator. There are things in there that we don't get in the CPI that will tell us more about that PCE. And that's why it's been, by the way, a market mover for the last several months while we've been watching and very, very tightly tuned to these inflation reports.
Two things. I love you. Last time you're on this program after saying that about Weiss, because I don't know if you saw his face, but he was very prideful in your statement there. I wish you didn't go there, but I guess you did. That's neither here nor there.
What is the idea, Scott, to keep them all down, keep them all in their place? I'm sorry, I'll work with you on that more.
Not all, Steve. You've been on this program long enough. Just Weiss.
Just Weiss.
Keep me
Just
in my
Weiss.
very elevated place.
Hey, Steve, in all seriousness, before I let you run.
We know we can't keep Josh down, so forget that.
What's your gut tell you about the kind of message that Powell is going to try to deliver tomorrow? I'm sure you try to anticipate these kinds of things, because you don't have to worry about them hiking or cutting or anything like that. So then it becomes the message. What do you think?
Well, I think reporters are going to try to get him to say cuts are coming, and I think it's interesting. He'll have to represent the view of the committee. And remember, the view of the committee will be known more so in the dots. And whether or not there are this concept I'm thinking tomorrow about dissenting dots, whether some of the guys don't really want to play the game of, hey, we're not cutting a lot next year. There may be those who say, you know what, we might need to or might be cutting a lot along with my inflation forecast. And that's what Powell has said is okay. If you have a more benign view on inflation, and Yellen said this today, Waller said this a couple weeks ago, that if you have a more benign view on inflation, it makes sense to have more benign view of the outlook for the funds rate. I think Powell's going to say, I don't have that benign view. I think he's going to look at this report today and say, show me where it's going to 2%. And we all look at it and say, hey, 3.1 is better than 3.2, is better than 3.7, is better than 9 when it was before. But Powell's goal is 2%. He's going to say, I don't see it. And I'm not going to be dissuaded yet to talk about cuts, because we're not there yet.
Let's see how long it takes for Waller's name to come up, right? Because this is the first chance to find out if Mr. Waller was rogue, or if he was speaking for someone or some people. So we'll find see you for certain tomorrow.
Sure.
After the decision is rendered and the news conference as well. Let's talk about Oracle right now, if we could, guys. Stock's down a lot. It's our chart of the day. Revenue missed. Shares are down, as I said. Guidance was below expectations. Bill Baruch joins us now because he owns the stock. He declared to us today that it's, quote, on the chopping block. So are you selling it today?
I'm not selling it today. I want to see how we get through this week. And it feels like it actually was about 3 months ago. I was sitting here saying the same thing. It's on the chopping block. It ended up holding, in a broad market sell-off, $100, which is a pretty critical level psychologically as well as technically.
I'm
but
back.
a second time down here, I'm less enthusiastic about it. Again, second bad quarter in a row.
I'm going
We're clearly
to,
not able to capitalize.
I have an
on
idea,
the AI
but then
move,
I'm like kind of
the movement there. But Larry Ellison was obviously upbeat
Let me eat this
on the
bagel.
call last night. He's talking about data centers.
I'm going to bring it up to
concerned
you.
about the scalability in data centers.
Right.
Though he
And
is
I'm gonna bring
hyping
it
the
up to you
EPS. I
guys.
mean, estimates for the next quarter out are confirmed. So if they're able to work the EPS at 132, I think 132, 135, 139 is
It
the
involves
estimate above
positioning,
analysts on the guidance of 127.
like today,
they
and
can hit
taking
that.
it into
I mean, it could
tomorrow.
really generate some serious free cash flow
So,
down the road.
I'm going to talk
But,
about
I mean,
that
again,
in
it comes
about
back
2
to the
minutes.
cloud
I'm going to
here.
eat this bagel, and we're going to get into it.
I'm a former Oracle shareholder, and fundamentally, I like the story. What's the risk management here? If this stock ends the week below its weekly closing 200-day moving average, which it looks increasingly likely, is that the point where you just say, all right, the trade is over and maybe I'll re-enter it at some point? Or is there something fundamental that you're using instead? I'm just curious how you think about that.
Well, first, from a broader picture here, I want to be rotating out a bit of tech. I'm way too heavy in tech right now as I'm looking into next year. And I'm happy with tech in general as we get some momentum in December. Oracle's left in the dust. So that's really the first one here on the chopping block. I was on the show last week and talked about a cut in Marvell. So Oracle's next. And $100 here, that's the level. So we go into the Fed tomorrow. If we have a broad market move down, I think Oracle would actually outpace some of the other stocks holding in a bit better. $100 is also the 382 retracement coming back down to those 2022 lows. So it's a big line in the sand there. Again, I'm not too enthusiastic about it, but I like to make decisions if I can on a weekly basis and see if it can respond to support here. But regardless, it's going to be one of the first names that I'm looking to cut here as I rotate into more financials and healthcare into looking out to 2024.
Yeah, I don't want you to bury that last comment that you made as you look to enter, financials and maybe healthcare or whatever else. What specifically are you looking to buy within any of those spaces?
Yeah, looking at financials broadly here, we own Bank of America, JP Morgan, as well as Morgan Stanley. Now, I want to build up Bank of America a bit more. I think it can outpace next year. I think the yield curve, we'll see that steepen. And if you see Bank of America overlay with a 10-year Treasury yield, it's been basically, or 10-year Treasury price actually, when we're seeing yields up, this thing's selling off. I'd like to get this, add to it at a bit of a better price. Now, regionals are also on my radar, but the problem with regionals here, you take a look at a name like Bank of OZK, and it's really outperformed well. And you take a look at a name like Citizens, and it has underperformed, obviously, greatly. Now, do we see a reversion of that, and some of the underperforming ones really outperform next year, and then you're sort of missing it, or you're really taking some risk with that? I like leaning into the big names right now. Bank of America is on top of my list. If I don't take more risk into a bank that could capitalize on yields, I would then look to Morgan Stanley instead, increasing my exposure there, or maybe adding a name like Goldman Sachs. But again, in 2024, I think we're going to see those financials really have a solid year.
All right, Bill, appreciate you coming on. Thank you. Good update. Now to Dom Chu, who has a market flash for us. Dom, what are you watching?
On a Dow component, Walgreens Boots Alliance, which is up about 2% right now, right near its session highs. And this is due in large part to a Bloomberg story that just came out in the last few moments or so, saying that Walgreens is perhaps looking to revive discussions on a possible £7 billion exit from its Boots UK pharmacy retail division. Now, this division has been talked about as a possible deal for maybe a couple years now, but they did say that the company has been holding early talks about ways to separate that UK-based Boots retail drugstore operation, according to people familiar, and that it's studying a possible London initial public offering as one of those possibilities, according to sources familiar. So that's the reason why those shares are up. Scott, I'll send things back over to you.
All right, I appreciate that update, Dom Chu. Thank you very much. Coming up, we got calls of the day, including a big upgrade for a real estate stock Josh has his eyes on. Shares are up 10% a month. This month alone. We'll give you the name when we come back on the half after this.
Like I say, guys, I'm here. I just got done eating. I'm gonna grab my Red Bull and I'm gonna go over a couple ideas for the afternoon and then talk about how I think I want to position myself for tomorrow.
Welcome back. We're going to show you shares of Zillow today. They got an upgrade. Josh Brown's had his eye on it. JMP is the upgrader. Stock's up 2.5% just about. Price target to 60. That's up 35% from the current price.
The volume's starting to
increase. Consensus estimates for 25 and 26 are too low.
I'm going to start to look at.
Josh, what do you think about this? You mentioned it on the show last week that you had your eye on it.
I think we have a deficit of single-family homes of about 6 million.
To try and take advantage of volatility.
That number actually grows larger. And mortgage rates have been crashing. They're down 6 weeks straight. So I think they have nowhere to go but down.
Right. Like, I'm planning this trade. I'll talk to you about it in 1 minute.
Be that. Like, broadly speaking, anything that has to do with the single-family home real estate market, Zillow is the biggest name in that space. It's a $10 billion market cap with $100 billion worth of name brand recognition. The stock absolutely cratered over the last couple of years, and with good reason. They got into a lot of bad businesses like iBuying and such. That's all over now. Now they're going to focus at what they're best at, generating leads for realtors all over America. Nobody does it better. There are other names in this group worth looking at as well, Redfin, Compass, etc. But if I were to pull the trigger, the one I'll probably buy is Zillow. The only reason I'm not there yet, the stock has just been on an absolute rampage for the last couple of weeks. It is right now getting stopped at its 200-day moving average. I want to give it a couple of days and see how that resolves, and it might set up for me. I will definitely keep you guys posted.
Okay, stock's getting a nice lift today, Shan. Watching this one?
Listen, I don't disagree. I think that the longer-term tailwinds for single-family housing are clear. I guess, you know, for me, I'm trying to figure out what's the kind of the first entree into that trade, and I think that if you're looking at it from a new home sales versus existing home sales, I continue to think that a lot of the housing growth is going to be driven by new home sales. So my first foray would sort of be onto the home builders, frankly.
They're already trading it like all-time
They're up.
highs. That's
They're
one
up
of the
50% this year.
But I mean, but existing home sales aren't going to pick up. I mean, you'd have to see this affordability improve and supply of existing homes improve, and I don't see that happening in 24.
Let's talk Humana. Upgraded to buy at Argus, Weiss. Target 550. You own it. This is part of your profitable healthcare trade that you've been on since, I think, the beginning of the year at least.
Yeah. This is a puzzling stock. When the Cigna news broke out, Cigna was thinking of acquiring them, and investors sold Humana and said, look, this is going to be going nowhere for 2 years while the FTC sues them to prevent it. So the stock sold off, major sell-off, about 10%, which is major for this kind of stock. Then when the news on Cigna came out saying we're not doing this anymore, the stock traded up pre-market, then proceeded to sell down again. So what do people want? In the meantime, I think at this point, it's relatively inexpensive. It's pretty predictable growth. So I think it's a reasonable, very reasonable purchase here. And, you know, it'll catch up. It'll always trade a discount to UNH, but it'll catch up somewhat. So I think down here, you've taken most of the risk out.
You still basking in the Leisman glow?
I think Leisman should be on like 20 minutes, and I should be on 40. So, yeah.
Well, you're on for the
He's
hour.
the smartest
What do you mean? You're already
guest
on
that we
60.
have. I mean, like on camera for 40, not just on the show.
They might be ready for Leisman for that.
Okay, not me.
Don't get over your skis,
Okay.
all right? Rio, upgraded. Jenny, you own it. Overweight, that's at JP Morgan. Best-in-class balance sheet. This is what JPM says, with minimal debt and substantial capital headroom.
Yep, so I think that's right. It's interesting. This is in our international income strategy, and we actually added it a really long time ago at 46 bucks. And the cool thing is, so it's a dividend play, right? It's got an almost 6% yield. We added it at 46 bucks. We've collected $35 of income on it. It's trading at 69.50. You think normally I'd say like, okay, it's time to sell. It's had its move, blah, blah, blah. No, we're in this for the long haul, and it's interesting because the world collectively is really underinvested in commodity production for the last 15 years. So now it's too late to catch up. These mines take 20 years to build and get up to production. And so for what we need for the next decade or two, we're underproducing. We think this is just a huge cash flow. It's got a 9% free cash flow yield, like I said, a 6-7% dividend yield. They have $10 billion of free cash flow. Everything's going for this one.
All right, let's get to Pippa Stevens now. She has the headlines for us. Hi, Pippa.
Hey, Scott. A senior official said President Biden invited the families of American hostages in Gaza to the White House on Wednesday. This will be the first in-person meeting between the president and the families since the Americans were kidnapped on October 7th. The official said the number of families expected to attend is unclear and that some may appear virtually. A former Georgia election worker is on the stand today in her defamation trial against Rudy Giuliani. The trial will determine how much the former New York City mayor and Trump ally will pay Shay Moss and her mother, Ruby Freeman. A judge found Giuliani liable earlier this year for defaming the two with claims that they committed fraud in the 2020 election. And New Hampshire Governor Chris Sununu is expected to endorse Republican presidential candidate Nikki Haley, three sources tell NBC News. The endorsement from an early voting state could boost Haley's status in the race for the GOP presidential nomination. Haley and Sununu are scheduled to appear together at a town hall tonight. Scott, back to you.
Pippa, thank you. That's Pippa Stevens. Up next, Mike Santoli. He's here with his midday word. We're back right after this.
All right, let's do it. I got my Red Bull, got everything ready to go. Let's go over some trade ideas for tomorrow. So what I'm thinking about is putting on some shorts for tomorrow. thinking about, let's go to the SPY. I can show you guys what I'm thinking about here. So, hold on. All right. Let's see.
The biggest ideas inspire new ones. 30 years ago, State Street created an ETF that inspired the world
All right.
to invest differently.
So I'm looking at Friday's expiration. I would think now would be a good time to put that on. I still have, hold on. All right, I think I got it. So look at this 4-hour chart. One. Look at that decrease in volume. And look, you get that pullback. It just fell off. This volume is falling off. We're not through this. I'm on a 4-hour chart. We're obviously not through it. Just noticing yesterday, today. When would that end? 12 o'clock? 1 o'clock? Here in the next 20 minutes, if it hasn't already ended. Yeah, probably 1 o'clock. Where are you at? Are you there? Nope, 1 o'clock. Okay. Alright, so making new highs on less volume. Alright, making lower highs, or making new highs on very low volume. Look at this volume back here. That's volume that's looking for a breakout. Hold on here. Let's see. What is that? 11, 22, 3. Okay, yup, and a bang. Alright, I'm just relapsing time because this was when I was in Florida. We can always go back to the cup and handle Florida. And just remembering everything. Like this here was yelling in the banks and blah, blah, blah. And we just rallied. And then we go to pull back to this level. As we're going up, we're like, yeah, we could pull back to this level. And then we go to pull back to it. And just because it's 3 months later, people are like, oh my God, what's going on? Blah, 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 blah. Everything's so bad. You know, they start coming up with things and not understand. It's just like, bro, what happened to the pullback from 3 months ago that we all knew that we needed? It's just funny how the market works, right? So, you have some nice volume down here. I feel like we need a pullback. And just because, you know, it's just we're grinding higher on less volume. It's just everything's looking like, you know, if we get that bounce with yields and the dollar, could that be because of Powell? And that's going to give us our downside. You know, I'm ultimately don't want to fight this trend. I don't want to fight the trend, but if I have to use the things that I see us breaking out to higher highs on less volume. Let's go to the dollar. So I'm thinking about, because, so, oh my God, I just deleted that. Shit. my thought process is grab some puts at the highs wherever this market wants to pull back, like the CPI, from when the CPI data came out, and I should at least be able to, with some volatility, gain something from those contracts. It's not a guarantee. But where's the pullback? Like, that's what I'm getting into now. I was thinking 355 or 455 area. I was thinking those puts. Because even if we get to 459, 458, you know, we're at 463 right now. Let's just see up here. Yeah, I want to take this thing down here. What is that's? Hold on. Let me see here. So that whole move is 1.5%. That's 7 points at a percent and a half. I think we can move 1.5%. I think this breakout would be really nice to be met with some support here. We break out, pull it back, and find support back down here in this area. Ultimately 459, high 458s. Right? And then grab some liquidity here. Wham, make that new high going into Christmas. Right? That's what I'm thinking. Like, that's just a thesis of mine that I think I could see happening, is what I'm saying. That's how I think this market trades. But does Powell say, yeah, like what Steve said, you know, we're at 3%, not 2%. You know, inflation is still not down yet. Higher for longer, and that cracks us back into this range. And give me them 455 puts. That's what I'm thinking about. So now it's about timing. And worst case scenario, does the volatility help pay even if it goes in the wrong direction? You got to be comfortable with losing it. But for a Friday put at $40 fucking at 1.5%, and I'm paying 40 cents for those guys, it makes sense. You know, maybe I back these up with longs during the day. Maybe I find an out of the money call to try, or something, and try to hedge this with. So I think I'm going to put this on. I think I'm going to put it on. I wanted to look at the dollar and stuff, but I think I'm going to put this on. I think, I'm just wondering if it gives us that 464, 463.50, that pre-market high. Because we're flagging right now on the 5-minute coming into the 9 EMA. We could get a bounce. If this fails, then sure. What's going on here? So if this does fail on a bull flag, I am in these. I will be in these. And what is this? This is December 15th. Wait, what? December 15th? So, and I'm on the SPY, right? Yeah, I'm on the SPY. December 15th. All right, I'm going to take that. I know I'm way out of the money. We could still see a bounce here. I am in those. I am in December 15th, SPY 455 puts. It's a 1.5% out of the money. And there's that bounce. Let's go look at the dollar. So I'm in those. I don't have to worry about it now. Damn it. She's going to bounce. That's a break and retest. Watch us start ripping. Let's look at this volume. Give me the 1 minute volume. All right.
the right one for you. Creating a plan with Fisher Investments gives you the confidence that your money can last through retirement. We'll shape your plan to meet your unique goals, needs, and lifestyle so you can enjoy the retirement you dream of. Call now for your free Fisher Ready, Set, Retire kit.
Man, we could get a nice bounce here. Look at the RSI. It's still down on the 1 minute. Holy cow. We are getting some, let's see here. What does it look like to previous candles? So they are taking stabs at sell orders up here. So I am in Friday's options. All right, I am in those. I'm sure I market ordered in because the spread is a penny. So I'm not going to fight for price when there is pretty much no spread. It's just so yeah, we have put those on. Now it's time to manage it. Now I'm gonna see if we do get some movement. Where am I going to like take profits at? All right, where's going to be an area? 462.50. We could see a bounce. You know, I don't want to sit here and like play around with these and unless we get if I get clear directional trend and we get down to like, you know, 461.50, right? We get down there again. See how we do. Maybe I take profits, get a bounce, and then get back in again at a cheaper, you know, take profits, get back in at a lower price. You gotta know what you're doing. All right, I'm gonna rinse these. I'm just like rinsing the washcloth or whatever, right? I'm just gonna just drain it for everything that it's got. That's the goal here. Oh, is it going? Okay, so there it was. There was the bounce. Where did we say? 89, 90? It was $1.90, right? Yeah, $1.90. Didn't quite get there. I wouldn't trust this. Don't trust this breakout, guys. Lunchtime breakouts on low volume are not to be trusted. You are above the 100-day. Let's see what happens here. I'd like to see some volume on this name. So I'm looking at, for those SPY puts, I'm looking at yesterday's close. Like 462. Man, that ENPH trade hurt yesterday. All right, so what am I doing here? What am I doing? EMPH might be a nice sell up here at this level. Nice rejection there. That might be the area for the SPY right there. I gotta use the restroom. I will be right back.
It's the yield just isn't there. So as soon as we get past January 1st, I'm going to sell that, kick the tax gain into next year. I don't think there's significant downside, so there's no urgency, and we will replace those. So actually, Organon's a great example of when you're saying, are you repurposing?
Yeah.
So we tax loss harvested in Organon. Because it's a dividend income portfolio, there's always cash flowing in. So what I did when I bought it back was I didn't just buy it back at the same level I had sold it out at, but I actually put it back in the portfolio across the board at the model weight. So it really increased the position size. And so the moves are going to be pretty marginal. And then when I think about what I'm going to do in just a month and change, not even a month anymore, and when I sell something like Seagate, and I'll probably sell Iron Mountain also after a year, and that's an enormous gain over the years, it'll go into things like Flex, like Organon, like Clearway, like New York Community, and that's just, I think, prudent portfolio management. But at this point, I don't have anything great on the short new buy list.
All right, you let us know when you do.
I will.
We'll take a break. We'll come back. We'll do finals next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, so I just forgot, guys. Let me take a piece off here. Shit, I don't know what to do because we had this bond auction, and I think rates are going lower. I'm going to take that. And I'll relook at this. I forgot about that. I forgot about the bond auction. And I think, man, I still feel like I went like here's what I'm thinking. I'm thinking that you have two things in play, that we are on the back end of rates, right? No matter what. We're on that 6 to 8, 10-month stage where rates are going to possibly pull back. And then the dollar also to pull back. So is that what's going to happen, or do we see a short-term pullback just because of CPI? Like, because they, what I'm saying is, like, how is this bond auction going to go? Right? How is it going to go? Are they going to stick with the theme that currencies, or at least the dollar and yields, are going to pull back? Here we go. 4.7 previously. Let's see. Watch TLT. I had to manage that trade. Come on. It's not time yet, but all right, let's go. Come on. That chart right there looks like it wants to bounce. Looks like it's pulling back, ready to bounce, if you ask me. Come on, let's go. Let's go. All right, market's bouncing. Market's bouncing. Come on. $4.34. 4.34. So it feels like they're sticking to this they're sticking to the script. Like I said, I'm like, are we going to just continue with the the future outlook, the 6-month outlook, right? Which is rates are pulling back, dollar pulling back. Okay. And that seems to be the case. So that's why I took that put off. Let's see what those puts are trading for right now. See if they changed much. 41 cents. So they did. They're down 5 cents. So that was smart. Right? That was smart to take that off and say, hey, let's just wait. It could have been a lot worse. It could have worked in our favor. It also could have not worked in our favor. Now, the reason I took this off, again, is because longer term, not worrying about day to day, the longer term sentiment is that yields are pulling back. The dollar is pulling back. So therefore the market is climbing higher. That's not the only reason. I guess that's why the market would climb higher. But so as yields pulled back, market goes higher. That's just what's going on. So that's why I took that 455 put for Friday off. I know it seems far out of the money, but it's really not. It's only 1.5%. Now maybe we get another re-entry at 30 cents, 30 to 35 cents. See if we can get up to that CPI high, that pre-market high. CPI high even. Really on like a 5-minute candle or a 3-minute candle, like here, I'll show, like see if we can get up here, 463.50. So that's a nice break and retest. Let's see if we break out. We could have a nice long here on the SPY. Where is my value area? So I'm gonna. If you guys have any, I don't know if there's anybody here or not, but if you guys have any questions, just throw it in the chat. I'll be here. I'm gonna go run through some charts real quick, but I am here.
Our next guest says we a soft landing. The question is whether it lasts. Joining me now, Julia Coronado, founder of Macro Policy Perspectives, and joining us also in the exchange is Steve Leisman, of course. 2023 has been a soft landing. You say we are living the dream.
We're living the dream. It's not a destination, it's an environment. And you can't really argue that low unemployment, healthy job gains, and declining inflation isn't a soft landing. It has been a soft landing.
But we're still quite a bit away, aren't we, from the Fed's goal of 2% inflation.
That's right.
And is this last mile going to be the hard mile? In other words, the drop from 7% a year ago has been pretty precipitous.
Right. No, we are not of the view that the last mile is the hardest. We see plenty of the seeds in today's report that process is ongoing and will continue, and that we will be very close to the Fed's destination by the end of 2024.
All right, we've got a 30-year bond auction to tell you about, and Rick Santelli is just the person to do it. He's tracking the action at CME. Rick?
Well, Tyler, the last 30-year bond auction is what started the entire craze about paying attention to weak auctions, but it wasn't meant to be 2 in a row, because this 30-year bond auction went quite well. I gave it B as in boy. The yield at this Dutch auction, 4.344. The when issued market, well, its yield was a smidge higher, closer to 4.35. So when the when issued is lower, that means the government sold its paper at a higher price, and that's a good thing. So pricing was a good mark.
That's what I've said. You got to watch these auctions.
Or slightly above 10 auction average. The one standout, indirect bidders. That's the one we pay attention to because it includes foreign purchases, and those foreigners did step up. 68.5, the best since July of this year. 68% is the 10 auction average. We all know that you could have a lot of soft auctions and not necessarily say that Treasury supply is doomed in the future, but it always pays to pay close attention to every auction to see the ongoing demand profile, because we know with the amount of debt we have to service and the amount of debt we have to sell, that we're going to have large auctions for a long time. Tyler, back to you.
All right, Rick Santelli, thank you very much. Steve Leisman, let me turn back to you and see if what you think of the inflation numbers as we look at them now. Core inflation is still at 4%, and the Fed wants it at 2%.
Yeah, first of all, let me just point out a B in Rick's class is like an A+ in every other class. As you know, Tyler, Rick rejected slide rules when they came along, let alone calculators. He wouldn't let his students use those. So he's tough, and that's a good auction. I'm seeing yields come down. That's going to be helpful, I think, for the economy.
Like some girl or
on the inflation story, I think it was a very neutral report. I did not see the positive bullishness that a lot of people saw. And, you know, getting back to Rick, he said it this morning that it was a bit of a Rorschach test, and I like that. And I like to think of it the way Powell's going to think of it. And he's going to point out, Tyler, what you just pointed out, that the service number is sort of barely budged, the 4% number. He has put that out as the marker. He'll acknowledge that the headline is better, but he's not running an oil company here where he's trying to, you know, figure out what's happened to oil prices. That's what headline inflation is telling you. I like that food prices came down. I think that's going to help, or food inflation came down. I think that's going to help. There is some disinflation or even deflation on the goods side. But Powell has focused his policy and his outlook of policy on the service side. There's less improvement there. I think it's coming. But I don't think it's going to be a guessing game, Tyler, where we're going to wonder what Powell thinks of it. I think what's going to happen is we're going to see the numbers, and we're going to know that he and other members of the Fed board like those numbers enough to cut rates. These were not those numbers.
You say, Julia, that the futures markets indicate the Fed is going to ease aggressively in 2024. Do you believe that?
I think that the market's a bit ahead of the Fed, has been. It's gotten quite optimistic in the last month or so about discounting 5 or even 6 rate cuts and starting very quickly. And I agree with Steve. We are not there yet. Jerome Powell is not there yet. Today's report only confirmed, I think, the higher for longer messaging that we're likely to hear tomorrow.
I'm sorry, I imputed that thought to you. It was actually in an article I was just looking at. It was somebody else. But your answer is don't expect aggressive.
I think Q1 is very early. They have laid out a strategy. That strategy is working. You raise to restrictive territory. You hold there until inflation is sustainably on its way to your target, and then you ease back the funds rate.
Q2 would be the earliest,
Q2 would be the earliest. I think that we could see the data adding up to really give the Fed the confidence to start adjusting the nominal funds rate.
Steve, why would the Fed start to cut rates next year? I mean, the survey that you just showed did show a slowing economy, 0.9% growth. That could be one reason to cut rates, I suppose.
Right. I mean, there's a good reason and a bad reason to cut rates. Let's hope it's the good reason. The bad reason would be if the economy were to roll over into a recession.
That's where I'm coming up with that 69.
The Fed could cut very quickly.
Right.
If it's cutting in order to normalize policy, that would be a huge and very, very welcome development. In that case, what it might do is say, hey, inflation has come down to a place where we feel confident it's headed to 2%. Notice that I'm making this comment that the Fed would be cutting before it's at 2%. It wouldn't have to get to 2% in order to cut rates. But it would say it's heading down to 2%. We feel confident it's heading down that way. We feel we can ease up on policy. Otherwise, we will become more restrictive. We want to normalize policy. Remember, Tyler, their long run rate is 2.5% on a nominal basis. So the Fed would have quite a long way to go to get to normal policy, and quite a lot of distance between the 2.5 and the 5.38 where it is right now.
So just to wrap it up here, Julia, you think we're in that soft landing now, and we don't get materially softer? In other words, the economy doesn't get materially softer, or do you think it will?
There are risks on both sides of this. I think the same forces that delivered better than expected growth are still intact. That is better productivity numbers, the economy, better labor supply. I think these things have legs and can continue into 2024 and keep us in the soft landing environment. On the other hand, there are lags in monetary policy. Rates are very high, money's very tight. We could start to see that bite in business investment, in spending on consumer durables. The housing market is still in a deep freeze. That's not a sign of a healthy economy. So there are, I think, risks on both sides of the outlook, but we're reasonably optimistic that we can. The good news is the Fed has ammo.
Yeah.
If we do hit a patch that's much more worrisome, they
Talked
can
about
cut
this
rates,
last
not even
night.
slash them
Roblox,
to zero, just cut rates
trying to
100
break
basis
itself
points.
out.
If we uninvert the yield curve, that can really be a positive tailwind for growth in the
Steve, did you want to squeeze in a final thought?
EWJ.
Yeah, I wanted just to compliment Julia and her thinking about this, because when I read her notes, I thought that's a really original thought, thinking that we keep thinking we're still in this process of getting to the soft landing. The idea that we're in the soft landing changes the way you might think about the future, in that there's another cycle to come here. We keep waiting for the cycle, but maybe it's here.
We're in it.
And then Julia also
it could be an
underscores
event to give us a
my great
pullback.
fear of living through great times and not
And
noticing.
this is me. This is what I'm talking about with,
Right,
with
Steve, great
options.
point. Great
Especially
thought
like on the
which to
Spire,
end.
the Qs.
Steve Leisman,
just-
Julia Coronado, thank
just
you very
rinse
much.
them things out.
All right, small
so
caps still
EWZ,
trailing the broader market year-to-date basis, but they have been having a bit of a moment, outperforming the S&P 500 over the past month. Our next guest says more gains ahead. Joining us now with top picks in the index is Sandy Villery, portfolio manager at Villery & Company. Sandy, welcome. Good to have you with us. Small caps and value have not exactly been players this year. Why not, and why now?
It's really incredible, the divergence between, look at the Vanguard Growth Index up 42% on the year, with the Russell 2000 up 7%. And then if you look at the Vanguard Value Index, the large cap value names up 3% on the year. There's an amazing, spread, and it's time to look at buying small caps and maybe selling some of those sensational 7 and taking some profits.
So you have
well, just because they haven't participated doesn't mean they will start to, does it?
There.
No. So when I look forward, and I'm sort of just looking at valuation, right? Valuation means a lot to me at our firm. We're stock pickers. We look at individuals. We look at individual companies. And when you look at the S&P 500, it's trading at about a 40% premium to its 20-year historical PE multiple range. And if you look at the small caps, it's about a 15% discount. So I think there's value. They're cheap. And if you dig through the rubble, and there is some, money can be spread out, and you start to look at other sectors except for these 7 stocks in the S&P 500 that have been controlling all the returns, I think there's going to be a lot of money to be made in 2024.
Mm-hmm. All right, let's go pick through some rubble, shall we? And go to some stocks that you do like. One is Atlas Energy, $2.4 billion market cap, priced at $17.30, an oilfield services company. Why do you like it?
Pull back to 48.
Today's a little bit cheaper
try and
with
get
energy
it.
coming in. So
I
this
gotta
company just went
go long
public
a pullback
beginning
on
of
this
this year. They basically transport and
that's
produce
about
frac sand in the Permian, a very good area. So when they do this,
that's
it's
about
basically a logistics
as much of a trend reversal as I can
that
think
has
of. Now, I need
autonomous
to,
trucks, and they're going to reduce transportation costs by 90%, emissions by 50%.
Paying attention to
but
detail.
more importantly, when you drive in these very difficult roads in the Permian, it's going to reduce fatalities. So they have a 42-mile conveyor belt system called the Dune Express. Just spoke to the company about a week ago, and CapEx is right on track.
That's a sight to behold.
And this is one that I think is just completely differentiated from the competition, and one that we would own for the next 3 to 4 years.
All right, let's go to the last two, and we'll go for a twofer here. One is Pool Corp, biggest supplier of pool-related products in the world, and Palomar Technologies. Tell us about those two.
Yeah, I like Pool because it's pulled back. They obviously had a great tailwind in COVID when everybody was spending money on their backyards and their swimming pools. But what people don't realize, it's about 2/3 of their sales are just boring, repair, and maintenance of your swimming pool. So it's more boring than people think.
It's at 40
so I like
now.
that one a lot. And then Palomar, just an insurance technology company,
That's 5 cents
should do
cheaper.
quite well. Growing quickly and trades at less than 15 times earnings. So
I think I might
again,
have to get
a
up on
fast-growing
that.
company that people just left for dead because it's not a sensational 7 stock. At some point, people are going to find this one, and it's going to that multiple is going to grow.
I want these
into its earnings.
455s.
I love it when more boring than people think is
do
an
I wait
attribute.
till
That's
closer
wonderful.
to, again, it's
Sandy
about timing.
Villery,
I'm not
thank
going to
you,
get
Matt.
it perfect,
Appreciate it.
but
Thanks, Howard.
All right, coming up, Centene's Investor Day is underway. The country's largest Medicaid provider raising its earnings guidance for next year. We'll ask the CEO about that and its new $4 billion buyback with shares hitting their highest level in nearly a year. Plus, the CEO of TriPoint Homes is here with his latest read on the housing market as mortgage rates hold steady above 7%. You'll be surprised at who's buying their inventory and
what
what
I'm
they're
looking
paying.
at is like
The exchange is
RSI,
back after this.
MACD, and the volume isn't, you know.
This is The
value
Exchange
areas,
on CNBC.
funding controls, and trying to tie it all in together. So, man. Gosh, these commercials on CNBC. They're driving me nuts. All right, one more time. Damn it. So what I'm looking at is the 455s for Friday. 455 for Friday. They're 40 cents. All right, and that is 1.5% away from the highs up here at 464. Easily doable. I mean, because even if we can get a pullback down here to like 460, I think that would be pretty, that'd be a nice profit. 1.6%, yeah, 1.5%. Does anybody here? What are your guys' thoughts? You think now's the time to take that? I do. It's kind of, to me, it's rejecting up here. I just don't like that the volume's not there. It's rejecting up here, but there's not much volume. So we'll see right here. And right now will be kind of the tell of the tape because the 5-minute chart is sitting on the trade line. Right? It's either going to bounce and start getting some liquidity here or it's going to reject. Let's zoom in on that. Yep. And there it goes. There she goes. Hold on, right here. She should bounce right here. Should bounce right there. It did. 462.83-ish. 462.83. We have not hit VWAP yet either. They're still at 42 cents. It's 5 cents cheaper than where we sold, where I bought them, but I sold them at 46.
Fabletics.com. Welcome back to the exchange. Shares of the medical provider Centene up over 4% on its annual investor day. The company raised its 2024 adjusted profit forecast and authorized an additional $4 billion to the $1.2 billion remaining in its previous stock buyback program. Still, shares are down about 6% this year, as you can see on that chart. For more here, let's head over to the New York Stock Exchange, where CNBC's Bertha Coombs stands by with Centene's CEO, Sarah London. Bertha.
Thanks very much, Tyler, and Sarah, thanks so much for joining us. You know, one of the big issues that people have been looking at this year, you're the nation's largest Medicaid insurer, has been states dropping people off of the Medicaid rolls now that the pandemic public emergency has ended. What are you seeing, and what are you seeing with regard to those people being able to gain coverage on exchanges?
Yeah, this has obviously been a huge focus for us for over a year as we prepared for the process that formally kicked off on April 1st. Our priority has really been working closely with our state partners because it is a massive undertaking for them and leaning in to figure out how we can help them ensure coverage continuity. And so we are seeing some of those administrative disenrolls. We're seeing roughly 25% of members who come back onto the rolls because of procedural drop-offs. So we've been trying to help actually make that process more efficient. And then we have been able to also help members move over into marketplace products in order to preserve that coverage continuity. And so we're seeing that as an industry, we're seeing that from Centene's perspective, and we think that that ultimately is going to drive better health outcomes because those members have consistent access to care.
One of the things you told investors today was that you see yourself as a platform of growth when it comes to government-sponsored health care. You already stand high on the hill when it comes to Medicaid, high on the hill when it comes to the exchanges. You have 1 million members. and you're really trying to climb that hill when it comes to Medicare.
I kind of want to be able to put
what are
this
you
on,
looking
like I
at next
said,
year,
and
particularly since
kind of hold it until
you
tomorrow,
had
because I
gotten
think
lower scores from the Centers for Medicare and Medicaid going into 2024?
even just getting
Yeah,
some
so
nice
as
volatility
we said, we
with
believe
Powell.
that the 3 pillars of Medicaid,
Again,
Marketplace,
with
and
options, you gotta
Medicare are
time it
core to
right.
our platform. We think they are all 3 really exciting growth opportunities. And our focus in Medicare has actually been pivoting
wanna fight the
to
trend.
a historic
really
focus
don't. I
on
don't wanna
serving
fight
that
the trend.
low-income, complex senior population that's consistent with the sociodemographic
I just think that
population we serve
everyone's
in our
talking
other 2
about
lines of
cuts,
business, which allows us to
and I
leverage
think that
the
Powell
local
shuts that
core
down.
capabilities that we have
Right?
there into
Higher for
serving
longer.
this
We
more
went
fragile,
higher.
complex, dual
Now it's the
eligible
longer
population.
part.
I don't
We
notice
just
you,
got there a few
though,
months ago.
advertising
We
like
just
some
stopped
of
raising
your
rates.
larger
Literally,
competitors
they
as
just
much.
stopped.
Well, so reaching those
Right?
populations
They
is a little
paused.
bit different. We're
We got our
definitely
last one,
advertising.
what,
We're
2-3
finding the
months
right
ago? We got
channels to meet those
our last
members.
hike
Those members
over the
also
summertime.
typically purchase through brokers.
It feels like it was
actually through mail order.
2-3
There are
meetings
different
ago,
ways to reach the dual eligible
which in the
members.
grand
So
scheme
we've
of things
been really
is,
refining our distribution
you know,
strategy
it's
against that
not
target
that much
population.
time.
And the big switch you're making next year involves
I'm
your
looking to see if we can get down to like
pharmacy benefit
$461.99,
contract. You have switched from
$462. I want to
CVS
see if we can
Caremark
test yesterday's
to
close again.
Cigna's Evernorth, formerly Express Scripts.
See if we
How
can
is
test
that
that
going,
area.
and what are you going to gain from that switch?
Yeah, well, we were really happy to be able to take more than $40 billion of pharmacy spend out into the market in a competitive process. Obviously chose ESI. We've been working on that implementation all year. We've hit all the milestones. We actually had an early go live of one of our states in October that went really smoothly. So we're excited for that 1/1 kind of big bang that we have coming up. And for us, some of it was a fundamentally different cost structure that we could acquire to the benefit of our customers, our state customers, and obviously our federal partners, but also
so I got
the
this
level of
over here. I'm gonna go look
transparency
at a
that we
couple
know
other
that our
names.
customers demand,
If
and
you guys have
seeing
any
through
questions,
contracts and understanding
throw
what
them in
the
the chat. If
pricing
you guys want to give us a
strategies
like,
are.
that'd be
That's been an
cool.
important thing for us because of the role we play in government-sponsored healthcare, and then
Yeah.
innovation. And so those were part of the criteria that we evaluated, and CVS has been a great partner to us during the transition, and we're excited to move forward with these.
Oh, here comes the bounce.
You know, we've got
Damn
a
it.
number of really
Here she
innovative
goes.
drugs
She's
that are
getting ready to
coming on,
bounce, I
and
feel
just this week we saw the approval of a
gonna
drug to
bounce.
treat sickle cell disease. And more than half of the people
Every
who
time I
are
hear
affected
sickle
by
cell
sickle
or
cell
whatever,
disease in
I
this
think of
country
Tupac.
are on
What, you got
Medicaid.
sickle cell or
But with these
something?
drugs
From that
priced
Biggie
at
song?
$2 million, how are you going to try to help provide access to
Here it
these
goes.
patients?
Yeah, so what I would
We're
say
gonna
in
see the
general
bids.
is my hope is that all of the stakeholders across the industry really step up to design ways to make this accessible and affordable, because that's what we should do for things that are curative. We know the cost benefit, we know the
CNBC
life
commercials
benefit
in
for
my
those
head.
members. And so we are working really closely with our government partners to figure out what mechanisms there are to, again, make this accessible and affordable. And we have best practices from past examples that I think we can lean on.
But can you really afford that all in one swoop? I mean, in 2024, is that priced in?
I don't think it all comes in 2024. And if you look at how Medicare actually treats these drugs, there are mechanisms by which we can actually bake those into the rates going forward. But again, finding the right ways to pool the purchasing power and pool the benefit, because we really should be focusing on what's the best thing for those members.
Sarah London, thank you so much for joining us.
Thank you.
Tyler, back to you.
All right, thank you both, Sarah and Bertha. Coming up, a decision of epic proportions. The antitrust case against Google in San Francisco could lead to massive changes to its Play Store. We'll discuss what those could be when we return. We'll be right back.
All right, let's come up with something, man. Let's come up with something. Gonna scan around. I gotta look. I feel like I'm stuck and I don't really have some ideas. Just because of how things happened this morning, I feel like I'm not on top of on top of my game. Just with some of the news. There was actually a lot this morning, and it didn't come out until late. Like, I don't know if it'll still have it on there, but hopefully it has it. Let's see if it does, because there was a lot of news. Man, if the Qs hold up there, that's gonna stink. I mean, it's not gonna be a big deal. I'm not gonna like micromanage this position, but just telling me that pop, and it starts ripping. I just want to get a good price. Again, that's all about timing. It's all about timing. I'm already down. See, I told you. Pop. This is an area on the ES right there. You can see on a 15-minute chart. It doesn't get much clearer than that, guys. That's why it's good to look at futures. Look at that. I guess I needed a minute to see what it was really showing me.
Anything can change the world of work. From HR to payroll, ADP designs forward-thinking solutions to take on the next anything.
Shit. Look at that consolidation above that the initial morning, or not initial morning, but this previous high. Right there. It's a key level right there. So if you wanted to take a long at this level, your stop wouldn't be too far away. I mean, I could take this thing every 10, 15, 20 cents and give you a level, but that's a pretty clear level there. Turning that those sellers that's sold there, it's now above that. Now they're like, okay, those sellers, do they turn now into buyers? That is the question.
Welcome back to the exchange, everybody. The home construction ETF, ticker ITB, climbing more than 50% this year. What a snapback from last year. As builders reap the benefits of low existing.
I don't think they have to tell us that they love their job. I think we know that they do. Referencing the new CNBC commercials. I just had to close. What is this? Apple? There goes Apple climbing higher. Climbing higher. Making new highs. Oh, I gotta close. I just had to close that other blind. It was kind of blinding me.
Basically securing mortgage funds for homes that we close in the next 90 days, and I can provide you with on a conventional loan of a fixed rate of 5.96%.
All right.
It's another financing tool, Tyler, that we use in the new home building industry to attract and get buyers into our homes. You know, by the way, our home buyers typically put down 19%. Their annual incomes are about $187,000. So we deal with a very strong buyer profile here at Tri-Home.
I can see certainly why home builders such as your company have an advantage over the previously occupied homes, because those folks may have mortgage rates at 3%, 4%. They don't want to sell. They're locked in like me. Excuse me. And so the new home is really a great option. But I want to come back to my initial question. Are the prices you're able to get today the same as, higher than, a little bit lower than the prices you were commanding for an identical home a year ago?
They're generally a little bit higher, anywhere from 1 to 2.
Home builders have an advantage over the previously occupied homes, because those folks may have mortgage rates at 3%, 4%. They don't want to sell. They're locked in like me. Excuse me. And so the new home is really a great option. But I want to come back to my initial question. Are the prices you're able to get today the same as, higher than, a little bit lower than the prices you were commanding for an identical home a year ago?
They're generally a little bit higher, anywhere from 1 to 2 to 3% on, let's say, maybe around 60% of our communities, 70% of our communities. So
This is brutal.
the prices have trended up.
Shares of
it's
electric
because
vehicle companies
the
slid more
fact
than
that you're making. I mean,
9% on
there's
Monday.
this locked-in effect
Lucy Group announced
in
the
the resale
chief
market. And as a
financial
result,
officer,
the new home builders
Sherry
have
House,
typically
is
about a
stepping down
10%
effective
market share.
immediately.
Right now,
I
we're
saved
enjoying
my
about a
dad from buying
30%
Lucid
market
stock.
share of all home sales.
They have a couple Lucid
So
cars.
that
They
locked-in
like 'em,
effect
stuff like that. But I'm
reduces
like, man, this
supply,
company's
and
still
when you
early.
reduce
You're coming into a
supply
high-rate
and demand is
environment.
there,
They
pricing
may
will
not
hold
be a
steady
company
or
later on
generally
down the
go
road.
up. Interest
Give it
rates
time.
where
It's
they
not the time
are
to
going
buy
to
it.
keep pricing
And
kind
this
of where it
idea
is.
that
We reported incentives
people
of
think
about
that you can just buy and
3.8%
hold.
at the end of
That's
the third
not,
quarter.
that ain't the game.
And so
Yeah, you can buy and
that's
hold
kind of a little
Walmart.
bit of a governor.
You can buy
as
and
far
hold
as,
Apple.
pricing
You know,
into
those
the
companies have
future
already made it and proved
as far as
themselves.
where rates go.
Like,
I've
you know,
always said,
Lucid is early.
rates affect
It's really
payment
early.
and pricing.
Rivian,
It doesn't
early.
affect
Rivian
demand.
ain't
So,
safe.
you know, if mortgage rates go
You
up
know,
8%,
Rivian's
then
okay.
we'll
I'd
have
say
to make
Rivian's
those
in a little bit of a
adjustments.
better
Yeah.
position.
I think there's
Lucid,
been a mythology,
that's not to
perhaps
say that
urban
those
legend,
cars are
that
better,
Gen
because
Z
Lucid
and
has the
millennials
best
were going to be slow to come
electric
into the
vehicle, in my
market, but you're
opinion.
selling 2/3 of your houses
Right?
to these demographic
As
cohorts.
far
I
as,
assume
you know,
that they
just
are moving
the
into
quality,
houses
performance,
for the
all of the
same
above. It is a
reasons
top-notch
the
vehicle.
baby boomers before them, the Gen
but-
Xers before them did.
You know,
You're right on, Tyler. I
That's
mean,
all.
and as a matter of fact,
So,
the Gen
this is
Z are actually buying
9%
homes at a
right now.
younger age than the millennials. There was that old
Wonder what's
wives'
going
tale,
on.
and it's probably some
Wonder if
truth to it
there's,
that the millennials were
anything fraudulent
staying
or
in
something
the
going on
parents.
with it, or
Our
like
parents, I have
books are messed
millennials
up,
there
or books are
in our
just took in
basements.
the
They weren't
books.
in our basements.
He or she, I don't
They're
know
coming
what it
out,
was.
forming households,
Airbnb,
and buying
Expedia,
homes.
downgraded.
52% of the millennials own homes. Gen Z, 30% of the 25-year-olds own homes. So that demographic is a huge demand component for the future of housing as we look forward for the next 5 to 10 years.
Those of us baby boomers who may be selling houses over the next 5 years, we're counting on those millennials and Gen Z people, Doug.
We are
counting
definitely
on them.
Yep.
To come in here and help. One other question: Are you mentioned mortgage rate buy downs? Do you sometimes get into the business of helping with closing costs? Is that another way that you can tip the transaction from from almost getting done to getting done?
Sure. We'll use a number of levers, as I alluded to, and closing costs, providing some options at no cost or some incentives on that are definitely the case. The one thing that I would like to make a point with you, Tyler, is, when we talk about rates, and there's this whole trade, you mentioned our stock up this year, the home builders have typically traded down when rates go up, and when rates go down, the stocks go up. The one important thing, and I think Doug Yearley and Stephen Kim mentioned this last week, and I think it's an important point for the industry, is that TriPoint and our new home builders have continued to deliver results.
I gotta get some of
despite
these
higher or lower rates,
some of these levels
pandemics,
in order
because we've structurally changed.
It's starting to get
Our balance sheets are leaner, our leverage is leaner. As a matter of fact, we're generating positive cash flow and growing the top line and the bottom line, and actually giving back the cash to our stockholders in the form of stock repurchases and dividends. At TriPoint, our book value per share has gone up 15% since 2015 annually. So that's a pretty good trade and pretty good performance. So this rate trade, and how the builders are perceived in this rate environment, I think we've put that myth to bed a little bit.
All right, Doug, thank you so much for your time today, and continued good luck. Doug Bauer, TriPoint. Appreciate it.
Thanks, Tyler.
You got it. All right, shares coming up. Shares of publicly traded game makers like Roblox and Take-Two are higher today after Epic Games scored a major antitrust victory against Google. The details and what it means for other apps in the Google Play Store next. And as we head to break, here's a look at some of the stocks hitting new all-time highs today. Booking Holdings, Chipotle, Marriott International, and Costco. The exchange is back after this.
Let's go, Spy. Let's do it here. Let's just pull it back out of nowhere. Looks like the dollar is going to pull back here. Sheet. Looks like it's going to sell off and the market's going to pop. Where am I in this thing at? I'm not going to get rid of it just yet.
Well, Tyler, though Google and Epic's battle isn't over, Google says it will challenge the jury's ruling in favor of Epic, but this verdict points to big potential changes for app makers. Google could be forced to change its Play Store fees, which could be up to 30% of in-app revenues, enabling developers to pay lower fees or even avoid paying them entirely. It also
All right. Yeah, she's going to bounce.
app stores which they would control and profit from entirely.
So where would my stop be is the question. I really don't. Honestly, my stop would have to be.
Welcome back, everybody. Epic Games, the
above
company behind
430.
Fortnite, scoring a major legal victory against Google.
463.
Julia Borston joins me now with the details of the decision as well
These
as the
things are
broader
just
implications. Hi,
demolished.
Julia.
Well, Tyler, though Google and Epic's battle isn't over,
Let's
Google
see.
says it will
let's-
challenge the jury's ruling in favor of Epic. But
let's
this
really look
verdict
at
points
this
to big
because-
potential changes for app makers. Google could be forced to change its Play Store fees, which
Yeah, I
can
think
be
you
up
could go
to
down a little bit more
30%
and
of
then get a
in-app
bounce right
revenues,
there,
enabling developers to pay lower fees or
103,796.
even avoid paying them
103,
entirely. It also could be forced to allow
Alright,
these
and
apps
then
to offer competing
that
app
is
stores,
where-
which they would control and profit from entirely. The judge will decide the remedies to Google's anti-competitive practices in mid-January. Wells Fargo saying it sees,
Here we
quote,
go.
Match
That's
and
where
Bubble
I'm
as the
gonna
most
look.
meaningful potential
That's where I'm gonna
beneficiaries
look,
of
see if
app
we
store
can
fee
catch a
reductions,
bounce,
which
and then see if
ruling
the
does
market
not
can pull
necessarily
itself
suggest immediate
Because then that would take the
term
market up
benefit.
to like
Expect the market to
463.37,
begin
which is around that
underwriting
pre-market
fee
area.
relief. Wells saying that this
Um,
could also be a positive for Meta
I guess
because
like the
it's been looking
close
to
on a
have its
5-minute
users
candle
download
of
apps
pre-market
and
highs,
transact through its
like that
ecosystem for a
pre-market high
while.
candle
Now,
would be
KeyBank
around the
knows that
close on a
Spotify,
5-minute
Match,
that I
and
see is
Bubble
like
have agreed to side
436.37-ish.
deals that offer them more favorable terms than the base
right, so you get a
30%
pop
fee.
on the
So
SPY,
not
you
to
get a
read
little
too much into implications for
sell off on
those
a dollar
names,
right
but
here.
depending on
See
the
if it
judge's
catches another
decision,
bid,
they could end
goes
up paying
back,
even
bang.
less. And the smaller
Goes
apps that have
higher.
not
That's
been
what I'm
able to
looking for,
negotiate
at least
independent
hoping
side
for.
deals,
That
those are
this
the
gets
ones that
right
could
in
really
here. I don't know
benefit
why the
from not
cursor
having to
is
pay as
white.
much to Google. Tyler?
Let me see if I'm understanding this
understand.
correctly. Fundamentally, the two main places that people access apps are on the Google Play Store or the Apple App Store, right? So
Yes, and Google and Apple act as sort of gatekeepers. And if you download an app from them, you then also have to pay a fee, not just, or if you're the app creator, you would
Super
have to
Smash
sort of give a
Bros.
percentage
What's up, man?
of
How you
your
doing, buddy?
revenue and effectively pay a fee to that gatekeeper, which is Google or Apple.
for providing the
okay.
platform from which your app has been bought. So what are the barriers to entry for those apps to do exactly what I believe it was you described, and that is set
Okay,
up
I'm
their
sorry
own
about that,
platform
buddy.
or their own distribution vehicle or store to
I
sell
just had it
their
on because I
app
wasn't
or
talking
others?
too much.
Well,
I was
right
gonna
now,
scan
it's
through
simply
the
against the
markets.
rules. And that's what this lawsuit has been about between Epic and Google and also Epic and Apple. And that's why maker of the very popular Fortnite is at odds. It says have a digital duopoly here. So what's interesting is that's sort of what precipitated this whole thing. Now, it
Is that
doesn't
better?
make sense for every app to have its own
I
app store with
figured.
in-app purchases, but
Okay, cool.
there are a lot of apps
Is
that
that
would
cool?
really
Is it
benefit
like
from
kind
that.
of even
And if you're a game maker and you
for
wanna be able
anybody
to
that wants
sell
to watch it or
add-ons
listen to it
tools
or
for people who are
something?
playing your games, you would like to
Yeah,
have
okay,
your
cool.
own store within your app and
Appreciate
not
it.
have to pay any fees to a Google or an Apple.
What type of day you having,
Thanks very
man?
much, Julia Borston, reporting for us. Coming up, from
Was your
AutoZone
day
to
all right?
Ulta,
Was it good,
retailers
man,
not
girl?
so optimistic about 2024 despite record spending over the Thanksgiving shopping weekend.
That's
After
what's
Morgan
up.
Stanley's
That's
retail
what's
conference,
up.
their analyst says this name should be a standout next
So,
year.
yeah, what I was saying was, so on a 5-minute candle on the SPY, the close of that candle of the high on pre-market with CPI was up here. All right, well, I have two different. So my stop would be 463.35. So what I did was I grabbed some 455 puts for Friday at 40 cents. They were 40 cents. All right. Powell comes on tomorrow. And Powell comes on tomorrow and says we're not at 2%, but I think Powell takes back this idea of why are you guys thinking we're going to cut? We just stopped higher. We did the higher part. Now it's time for the longer. And anytime that you've looked and went back and looked at any of the data, they usually hold it there for around 10 months from the last hike, right? Because that unemployment with Fed funds rate and unemployment, it's usually about 12 months. What is this? Unemployment rate, and then we will add, let's add a line here. Is this, okay, so that's unemployment rate. Let's do Fed funds. And it's literally lockstep. Come on. It's like lockstep, right? So 2019 was the same. January of 2019, there it is. It's right there was the last hike. And then unemployment, they cut prior. That was July. But so that was, well, that was that whole 2019, 2018 debacle. Fed funds rate. So Fed funds rate, January 19, it's at 2%. Isn't that crazy? 2%. So right here, right, 2008. What is that? July 2006, roughly. And then they held to July 2007. So literally for a year. And why is that? Because the unemployment rate started to tick up. Right? There's the last hike, and they held. They held that for about a year. Right? July, June, July 4.7.
Our next guest, he told us it's Amazon and Walmart's
July
world,
2007.
and
But what you get here is right here is where the unemployment really starts to tick up. It's a year after they. It's a year. At least if you go back and look, like the majority of the time, and again in 2000, right? Look at the hike. June of 2000. They hold it to December of 2000, which is about like 9-10 months, and unemployment starts to curl itself up at that mark. Right, there's the last hike, right there. Boom, they hold, and then where is the month? June 2000, bang, January, February. Right there is where you get your uptick.
The big winner in that regard. If e-commerce continues to take share at
roughly about a year, give or take, like we could say 10 to 16 months. Maybe it's longer now because you have really 7 trillion in liquidity from the Fed and the government in spending. So that liquidity could probably hold things up on that timeline a little bit longer. So we just stopped raising rates a little while ago. I think it's going to be some time before Powell starts to even think about cutting rates. My stop will be up here, so it'll be around 436 or 463.30. All right, that's where I'm going to stop out on this. So right now I'm down about 4 cents on that trade. But again, that's dated for Friday. And I'm getting that because I think that Powell takes back a bit of this, like, why are you guys talking about cutting rates? We just got there. We're on the higher part. Inflation is coming down long term, but there's still a little more work to do. I don't understand why everyone's talking about cutting rates. And just even if we just get some type of volatility, I mean, we're talking 40 cents, which it might seem like 455 is a ways away, but it's only 1.5% away, right? That's only, and I'm talking from, really, my goal is to get to like 456, 457 in this area right here. My goal is to get to 457, and because I'm in the 455s, just getting to like that 460, 458, I'm going to be pretty nice and profitable, because then that premium is really going to have to start shooting up and start counting in dollar for dollar as the closer it gets, because we're getting them pretty cheap, and this is going to have to happen tomorrow. And this is of the highest CPI. That's 1.5%. We can do that. Especially if Powell gives us some volatility, which I think could happen. So that is my thesis. That's why I'm in this trade. That's my reason. That's what I'm looking for. We start trading above here, I'll just cut it loose and maybe try to re-enter it. I've already put on the trade and taking profit and taking it back off because we got. Here's where I got in. Here's where I got in, and it came down, and I just took profits off. And I said, and that was the goal when I said this. I said, if we get a pullback, I was looking for yesterday's close. I was looking for like 462. We didn't quite get there, right? It wasn't anything. It was like not even a base hit. Like I walked to first. You know what I mean? It's not like crazy money or anything, but I'm taking the options, and like at least with this trade, and if I can, I'm going to rinse it. I'm just going to rinse and repeat. I'm going to sell the rips. I'm going to expect that bounce and then get back in at a lower price.
The most on CNBC this past year. One is Nvidia.
And look, you can see here.
The other is Ulta Beauty.
It's trying to. Some people have the same thing in mind, that this area is roughly around their stop. So we're starting to see a little bit of a pullback up here.
They're growing, but they're cresting. This is a business.
I don't know. I think even just with volatility with Powell, maybe these 455s can really start. You know, they might even double. You know, doesn't mean that they will. But that's all. Just even if we just start getting volatility. Just because of Powell, it could bring that premium price up. Because you know how it is when it's Fed meeting, that these options will just start to go. You know, it's a little early. It's the day before. You know, obviously we have the nighttime and we wake up tomorrow. They could be down a few cents, you know, depending on where we close at and where we open. But it's just a risk I'm willing to take. You know, it's something small. You have to be comfortable with it.
Lowe's home improvement, I'd say be patient.
So
the worst of home improvement comps or sales are probably in the next 6 months, the fourth quarter and the first quarter. So while the market
look at Tesla
wants to
as
discount
well.
a change of the interest rate cycle, it's probably a little bit too soon.
Did she ever bounce off this area?
Simeon, thank you so much. We appreciate your time today.
She's trying. She's trying to reclaim VWAP.
Stores in retail are big number of them. Appreciate it. Okay, folks, the hour goes by very fast. That does it for the exchange. Coming up on Power Lunch, regional banks had once been leaders in retail.
I am looking at regionals
banking,
also. I'm looking at KRE.
Morgan, but now the firm is concerned
But I don't think it's time yet
in the AI
to take that trade.
An analyst will tell us the names most at risk. And Morgan Brennan is getting ready. I will join.
And there have been some layoffs. What's funny is we've just started to see, you know, a lot of these companies talk about layoffs. And just so anybody that's here, if you don't know, this on the left side of this will be level 2 for whatever stock is on the screen right here in this left box. And then whatever, like this is the options price. This is the level 2 for the options contract that I'm in. You know, this is the only position I have on at the moment. So that's what this is here. So this box will be level 2 for whatever is on the monitor. And this is 455 puts for Friday on the SPY. That's your level 2, your bid and ask. And then time and sales is right here on the 3-minute chart for whatever we have up. I'm going to look. So wait, I have a put on the SPY, so I wouldn't mind looking at this. Man, I don't know if we're gonna get a 440. If that rejects or not. What I'm looking at right here is this 438 puts on Tesla. 438 area. I'm going to be patient and wait though, because it's still consolidating. But this area right here, guys, could be key. This is the area I'm watching. Right here. Right, that's the area I'm going to be watching. To see if we reject off that pre-market low. And see if that is, if we're able to get some sellers to step up. Look at the volume you have there. Oh shit, Google had news too. This red box down here is the 50-day moving average. If you guys see those boxes, the red, so it's usually, it'll either be an area that I'm looking to sell at, or it'll be the 50-day moving average. Like you can see this green box here for an obvious reason. That is a buy area. But
November budget deficit 314 billion. Consensus was 301.05 billion.
yeah, I think 240. You have a gap fill up there, so it looks like we might head to 240. That's a $5 move. Maybe I could back these puts up with a call on this on Tesla. So therefore I could be just a bit hedged on this Tesla. What price is this? 431.45. 431.45. 431.45. Let's see how that works. See, the thing is, the SPY puts aren't really moving like the Tesla calls would be. But even if I can just get a bounce back up to this area, it may pay for, will put me green, and for whatever I'm down on these SPY puts, which isn't much. It's only a few cents that I'm down, about 5 cents. So those are some things that I think some people don't look into doing, which is, what's the direction of the market? Look, the Qs and the SPY are going higher, and here's Tesla still out on its lows, right? It's back above pre-market highs, and then you have Tesla below yesterday's low. So that's pretty bearish. All right, so there's your bearish sentiment. So tomorrow, if Powell, for the bigger trade, when we want to sink our teeth into something, if Powell is a bit hawkish and the markets are going to pull back, let's see if that's what the catalyst is going to be for Tesla. All right, Tesla's in a longer-term downtrend. It just can't decide what it wants to do. But the other than it being weak, or really it's just consolidating, but it's still weak in a sense, because the market's working at all-time highs and Tesla is far from all-time highs, right? There's the SPY is up here, the Qs are up here, Tesla's way down here, but really in the comparison to COVID, it's actually outperformed. So you know what I mean? If you want to look, it all depends on how you want to look at it. If you want to look at it from COVID low, the recovery from COVID, Tesla's still doing pretty damn well. So, but I could argue that the SPY is still back at all-time highs no matter what. Or the overall market, Microsoft, Apple, Meta, Netflix. But anyway, we're stuck between the only thing other than what I just said would be the 100-day and the 50-day being stuck between these two moving averages. And it's we're going to need those two moving averages to squeeze it out. Just like it did back here when we called it out on the live a few weeks back. We were there that day and we were already ready for it. Right here. Right there. Right? That's what you get. Right there. See it? It's stuck between these two moving averages. The blue is the 150 is the red. It's stuck between the two, and then they're squeezing into it. It's got to make a direction. It's got to pick a direction, right? It's stuck, and it's like, okay, and then boom, it just gets this blow up out of it. So right into that resistance, which is 260, is a pretty key area of resistance. So that's kind of what we have going on now. I think if Tesla, I said this this morning, that if Tesla can close up at that 240 area, it's going to help to anchor that 50-day up. It'll help anchor it upwards and start to get something going here, because this trading sideways is not only getting boring, it's just a move is to come. And we're on the brinks of it, I feel like. And when it gets going, it'll get going. It'll give you, it's going to give you 3-4 days of continuation. And that's what, what I'm waiting for, still waiting for in the bigger picture. Let's throw this up. Let me throw up the SPY to keep an eye on it. So we're almost up at the stop. Now, the SPY is probably going to pull back to 463 and probably hold. Let's see what happens. See what happens. We're an hour away from power hour. I don't think we have any data tonight for any China, Australia, Europe data. I don't think. Retail sales, GDP, like something that could help pull this market back before tomorrow's FOMC. So tomorrow we're going to get economic projections as well, the year-end projections, which will give us the target range for, I think, for next year, where the Fed thinks we're going to be. So let's see if they have on there higher for longer, and that changes things up. That's going to be what they're going to talk about. That's what everybody's going to talk about next. Higher for longer. The Fed has rates anchored at 5.5 all the way until September, August. They have year-end target at 4.5, 4.3, 4.2, not 3.8. I don't know. Just throwing numbers out there. So I think they may be in for a surprise with the FOMC projections, because the economy is still doing really well. I know there's a lag effect, but who's to say with the liquidity that they have provided that the market, that the economy can sustain these hikes? So these are just my thoughts again. It's just what I think. I said yesterday that I felt like CPI was going to be a little bit of volatility, but I didn't think we were going to get a surprise, and it was kind of going to be a non-event. Not necessarily a non-event, but you're just going to get a little bit of volatility, and it's not really going to give us that continuation that we're looking for. And look what Tesla did on the market pullback, right? The market pulled back, and look what Tesla did. Nice down move. I missed that short yesterday up here on that second retest here. Sucks. Is that the point of control? Hold on here.
Rick, I want to ask you the question I should have asked you an hour ago, and it didn't come into my head.
What is going on here?
The month-over-month number went up a little bit on CPI, but the year-over-year number came down. Explain that to me. Is that
Okay, so it's right there.
prices came down, or is that because a high number a year ago fell off the measuring?
Yeah, it's right there. 245. The question is, do we get short at 238, or do we think we can break above 238 and start headed back up to this 100-day? That's what I'm wondering myself. Do I throw on a hedge long on Tesla? But Tesla's weak. I should be short Tesla and long the SPY.
Yeah, it's not like spike the ball in the end zone great, right? Yeah.
Exactly. And I think that, once again, actually a little bit of both. Year over year is definitely affected by 12 months ago.
Right.
But we do see that headline was up a tenth. It should have been unchanged. So the year over year headline did have a warmer aspect to it. And that is the only metric the only metric that was less than last month. So you're absolutely correct. But the other issue is that we're at 3% in this metric in June of this year. So even though it was a bit cooler, it's been even cooler than it was today. If I was looking at all these numbers today, Tyler, I wouldn't be nervous about inflation, but it certainly isn't better than the report in November.
Yeah, it's not like spike the ball in the end zone great, right? Yeah.
Exactly. And I think that, you know, once again, thank you, Steve Leisman. He liked me calling it kind of a Rorschach because almost every guest that we've had on today kind of liked today's numbers. And I'm not saying that inflation's looking super hot, but it really hasn't changed much to the downside. And if your target's 2%, I'm sorry, 4% doesn't equal 2%, not even with new math.
No. And he also
and that's still a
complimented you for
100%
being a tough
drawdown,
grader, which is
from
a very nice thing.
4% to
Thanks a lot,
2%
man.
too.
Rick Santelli.
That's 100%
All right, hope for a
pullback.
landmark deal to reduce fossil fuel use has hit a roadblock at the United Nations Climate Summit in Dubai. Let's get to Di in Dubai. Hi, Di.
Hi, Ty. Yeah, look, it's just after 11 p.m. here at COP, and we're now being told there will not be a new draft of the climate deal tonight. The last version, released late Monday, totally dropped language to phase down
Come on,
or
man.
phase
Here it
out
goes.
fossil
Spy's
fuels.
just going to rip
It just
higher.
said countries
Watch.
should take action
I think
that
it's going to
could
just
include
bounce from
reducing
here.
their production and
I
consumption
think this is
of
where it's
fossil
going to.
fuels. This is a
You're see
major
a
blow
bid.
to those who expected ambitious action to slow global warming. Reactions flooded in immediately. Representatives from governments, policy groups, NGOs. One called the text a nightmare of weak proposals and internal contradictions. Former Vice President Al Gore posted on X that this COP is on the verge of complete failure and that the deal reads as if OPEC dictated it word for word. He went on to say, it is deeply offensive to all who have taken part in this process. Now, late this afternoon, there was a protest here on the COP grounds. We have not seen much of that at all in the past few weeks, even with 70,000 in attendance. But the frustration is clearly raw here tonight. The COP28 presidency, which is led by Sultan Al Jaber, the CEO of the state-owned oil company ADNOC, called the draft a huge step forward. To that, one analyst responded, I'm not sure which direction that step would be in. We have not heard from Jaber at all today. Tyler?
If I'm remembering correctly, next year COP is in Azerbaijan, which is also a heavily petrol-influenced state. Is there any controversy over that?
Yeah, well, expect that to start soon. The focus, of course, is still here on this COP. The next COP is not, in some minds, as important as this one. This one was all about something called the Global Stocktake, which was a report card on the Paris Agreement that's required every 5 years to see if the world is getting close to that 1.5 degree goal of warming after industrial levels. And that report card was an epic fail. This COP was supposed to be a reaction and action to that global stocktake. So really, it's all about this one. The next one, not in anyone's sights right now.
All right, Diana, thank you very much. Diana Olick reporting.
Well, coming up, an epic loss for Google. A San Francisco jury finding it maintained monopoly power through anti-competitive conduct. We're going to break down the results in Tech Check next. And do regionals need to bank on AI? Why one analyst says those stocks will lose market share if they don't adapt to the new technology.
All right, so I'm back. I'm back. Back to where I was. We're kind of just grinding higher. I noticed that these the market's not really moving in a sense, but it is. We are up 0.2%. Candles are getting smaller, as you can see on the 1 minute and 3 minute. So let's see what happens here the last hour and into the night. Again, I'm going to hold on to these until tomorrow. Let me actually hold on. I'm not sure what happened to my AirPods. Not connected. Okay. All right, so we're good. Netflix, NFLX. This was one that I was actually watching. It had some areas that I was watching up here. It did that yesterday and pulled back. Tonight, I'll put out a watch list. I'm going to run through a whole bunch of these names throughout, the afternoon today, and really see where, just in case yields end up moving. Where do I want to be short? Where do I want to be long? Do I want to tie them both in? How am I going to play tomorrow if we get some up or downside movement? So that's what I'm going to focus on tomorrow, is really to go see where some of these sectors are closing and where they're at in pertaining to what's up, what's down. We kind of already know what's been going on, right? You had large caps lead. You had large caps lead, and then you had names like Uber, Lyft, like those smaller cap names starting to catch up. The laggards are starting to lag, as in catch up to the leaders. So yes, that's where I'm at with that, and I'm going to continue to do that right now and really see where it is that I want to see what's going on here. Let's look at the S&P at least. So a little mixed, right? Financials are leading. Let's take a look there. Financials, medical, instruments and supplies.
Some news out of Netflix, a little insight into who's watching what and how much Ted Sarandos is publishing a new engagement report. Julia.
All right. Uber, I actually wouldn't mind seeing if Uber could give us a pullback. I want to see if some of these names start to give us a pullback. I just don't know what it's going to take for the markets to pull back. It's going to take something. Wow. It's already making... Yeah. Man, this was... Okay, no, never mind. Not year. It's back up at highs. Wow. What a run. And you got to give props to CNBC's Josh Brown, because he has been on this name all year. Last year, beginning of the year. He's just been high on Uber, and the earnings have shown. I mean, look at these earnings here. They had it down, down at their lows, minus 3.3 a share, 61 cents, getting better, positive, a little negative, positive. So we'll see. It's, he's definitely has a winner on his hands there. One of the bigger names that nobody really talked about was cruise lines, and it was really the whole industry, right? Like this thing at one point was up over 100 and some percent. No. Like, and this is obviously from the open to the high. Wait, that's so weird. Hold on, CC. Yeah, that's weird. I don't know what happened. Why it changed like it did, but yeah, it's up over, 100. It's up 130 some percent. You know, a lot of people discount some of these lower names that don't get talked about as much. Some people do. At least I'm speaking from retail space. They don't talk about some of these names as much as they should. Let's look at something like Palantir. Not Palantir. I meant to say that I am going to look at Palantir, but that Peloton, that's what it is. Peloton. Are they even still a thing? I know they are, but let's see here. Wow, that's a nice rejection. I wonder if there's some insider selling going on. I'd have to look. So, what is it? PTR? Peloton? Maybe? Oh, man, that's awful. That's crazy. This thing up $170. $170. This is why buying and holding doesn't work. Especially on names like dietary names and workout names. Like, talk about the Great Short. All right, look at that. Wow, beautiful. Another sector that isn't really getting much talk is the MSOS. All right, MSOS. Oh, look at. Really, it's had this down. I thought yesterday it was doing pretty well. What happened? Wow. I missed that yesterday and Monday. That's so weird. I was looking at it yesterday morning, I thought. And it didn't seem like this was maybe I'm just off. I don't know. That's weird. Is there any news? Wow, that is weird. I mean, that's all you see what's going on here. They're selling the rips. All that's happening is you're getting these rips, and I know why we bounced, right? The market bounced, but you had talks of, legalization of sorts for safe banking and stuff like that. There was just news. There was a catalyst, and then that obviously doesn't seem like it's gaining any traction. I will watch to see if it holds the 200-day moving average and maybe look at some leaps just in case, because again, because I think what you also may get is positioning for the elections for next year at these lows. And they're going to try and get ahead of the trade, and they're going to nibble at these really low prices and see if they can't, catch leaps at a small price, catch a bounce because of, the Democratic Republican primaries and all that fun stuff coming up. Because you remember what happened last time. They all talked about legalization, this and that, and I mean, he's already said and tried that they would like to try and do something with it, and maybe that's like a shot at trying to get reelected again. Right? It's kind of crazy that you want to pass a law just for your own benefit, in and of itself. Like, things should be done because they should be done, or things should be undone because they should be undone, not just because I want to get elected. So I'm going to feed you a little bit of crumbs so I get your vote. Let's see if that happens. So I'm going to keep my eye on it. I should have backed this up because my thoughts were we could get to around 470. I should have backed this up with a call. I should have backed this up with like a 470 call. I think that may be out of.
So there's about a 500% increase in the number of jobs that mention general.
Shit.
6,000% increase in the demand for.
All right, so I gotta figure out what I'm gonna do here. I'm gonna, like I said, I'm gonna leave this on because it's a small position, and I just want to see if maybe tomorrow I could get something. I battled whether or not I should do it tomorrow, getting in, because I had a feeling that something like this was going to happen. But let's see what happens. Let's see how we close, and then I'll figure it out from there. If we continue to go higher, because we're almost at my stop. And I feel like I don't want this thing to just like wick above and then turn itself around, and then I'm like kicking myself because I could have gotten a little bit of profit or gotten out break even. So I'm just going to hang on to it. Look at that time in sales. It's just green as green can be. Was, at least. I'm going to keep saying that. Just as green can be, because as soon as I say that, it goes red. So I'm going to stick with that. And I think you need to pull back to 466. I think that's necessary. Is that 4660, 463, 460 is way down here. Yeah, 463.
Where are we seeing the adoption happen quickly within the sector, and where, to use the tease we just teed you up with, where is it?
All right, come on. Like, let this be the area. Because I don't want to stop out on this trade, but I will if I have to. Well, if the cues are anything that are going to give us any insight on the SPY, the cues are headed to the high. So I may just go ahead and take some of this off. May just take this off for a small loss. It sucks, man. That's what happens. Like I said, you got to time it. It wasn't a big one, but I guess I'll stick to the plan, right? I'm going to stick to my plan. Let's just see how we close. Let me look at volume and all that, and let me dot my I's and cross my T's before I start just randomly buying and selling. What's up, Tish? Why are there so many charts? Well, right here, this is all one chart, right? This is a 1 minute right here to the left. Right, this top left, that's 1 minute. This right here is a 3 minute. Right, that's a 3 minute. And the bottom left is your 15 minute. And what this does is it'll help you kind of see the picture it'll help you see the bigger picture. And then the bottom right is your daily chart. 50 days getting ready to cross. So now let me bring up Tesla for you. It'll help you when you trade to where you can see levels. Right? When you want to see levels and kind of want to see using your moving averages. So I like on the live last night, I talked about yesterday, this second up here to the top right, this second pivot high, I missed that short. I was like, and I did that because if you look here on the 15 minute, as it's pulling back, I said, let's see if we can bounce to VWAP and get that 9 EMA, and it meet the 9 EMA, and it gets to it, rejects it, and it pulls that 9 EMA down through VWAP, and that's exactly what we got. Right? So I can see it on the 1 minute. I can see the volume, like what's really going on underneath. I have my 1 minute with pre-market. Then I have 3 minute, which will be my trading and watching for my entries and stuff, and kind of entry on 1 minute. Then I'll see the 15-minute chart. And again, yesterday's trade was Tesla. Yesterday was at 240. I'm like, let me get a bounce back to VWAP in the 15-minute 9 EMA, 15-minute VWAP, and then from there it just sold off. I missed that entry because I was scanning the markets, but that's why I do that. Then I have just a regular chart here, which I'll use for a 2 minute time frame, and I'll kind of just use that and whatnot. So, and as I'm going through like finding trades and like just scanning the markets, so that's all. Oh, are you? Okay. Well, that's why as I'm trading, this is what I'll use. I'll use the 1 minute, 3 minute, the 3 minute, the top right, which has time and sales. And then this here, this was my level 2. And then this will be my level 2 for options. But on the left is level 2 for whatever stock is on the screen. And then the one on the right will be for options. And again, it just helps you see the bigger picture without having to scan, because I can see right here in real time without switching. Is like we're bouncing off the 50 day, right? So that's why I have it like this, and I think it helps, right? It is this pullback's on a decrease in volume. We bounced right off the 50-day moving average. Let's see if 240, which is this gray area right here, if that acts as resistance. Let's see if we can bounce back up to yesterday's close, 239.50 to 240. Right in this area is where I want to see if we can get to. But we got to break yesterday's low. If we start getting some selling pressure at yesterday's low, then, it may not get there. But I don't think that's the selling pressure. I think the selling pressure is up here. If anything is, if I'm reading the charts right, your selling pressure is up at 240, not 238. But this will be a level like 238. right here will just be a level. Like if you do start to bounce, that's where you can expect, like if you were long, right, off this double bottom off the 50-day, and you took a long, you could say, all right, I may have resistance right here at, I don't know, what is that, 235.99, 236. 236, you should get a pullback. That's a minor level. We break through it, we hold 236. The next level, like the target is 240, but yesterday's low, this area at 238 should be an area that if it gets to it, there'll be a slight pullback. And as it pulls back, it'll bring VWAP up, and then you'll look for, maybe you take some profits off, depending on the tree. You could do it, a few different ways. And then you look for it to pull back, hit VWAP, and then start to try to break through that level on volume, pulls back to it, and then ultimately the target's 240, yesterday's close. Yesterday's VWAP, yesterday's close, just that whole level, 100-day moving average and all that. So, yeah. Tomorrow's going to be good. Today it's kind of just waiting for things like, things are trading sideways. My cat just took off. So what I'm going to do tonight, and I'll have a live stream for it. I'm going to cover a lot of the, sorry, my cat just took off on the window. She must have saw a rabbit or a bird or something. I'm going to go through a lot of these names and see what do I want to be short if Powell tomorrow, says, why are you guys talking about cuts when we just stopped raising. Now it's time to hold higher for longer. We got to hold rates. Holding rates here. We're not down to 2%. We're at 4 year over year. PCE is at 4. Really, they watch PCE, not CPI and PPI. So anyway, I'm going to figure out my game plan for tomorrow. If he's hawkish or if he's dovish, right? If he talks up the markets or if he tries to talk down the markets, I'm going to have a game plan. And I'm going to want to be in names that are weak if I want to get short the market. I want to look for names of strength, like AMD, right? If I want to be long, AMD might be a name. If yields start to pull back tomorrow, I might want to finish out that leg on AMD for a long, or whatever else is strong right now. Your mid cap names like semis are pretty strong, but so that's what I'll talk about that more tonight. So ARM regained that level. So yeah, today's kind of just waiting for tomorrow. I did put on a 355 SPY put for Friday at 40 cents. I might have to take this thing off. Like I said, so I mentioned just a little bit ago, look at the Qs. Look at the overall indexes, right? Look at the Qs, the IWM, the Dow, the SPY, and the ARC. That's what I do. Look at the Qs. They're up above pre-market highs. Let me fix that. Let me just go to like a 3-minute. Right? So if we go there, right? So if the Qs are up here, then we can expect that the SPY is going to get there. Right? Then the SPY should at least get to like... Sorry that I hate that I have to do this, but because of the way the chart is, the SPY should get up here too. It should at least get there. Right? Especially if the Qs continue higher. But here's what I'm seeing. The Dow, right? The Dow is also lagging. And then behind that would be IWM, right? So now that the Qs are up here, right? The Qs are up here. The SPY is here. The Dow is here. IWM is here. It should start to catch up with them. So we know tech is leading, right? The Qs are leading. The IWM is lagging. So if I want to be short, what would I want to look at? I want to look at whatever is in the IWM, right? Like KRE, regional banks. They are red on the day, right? They're red. They're down 0.3%. Okay, so I'll take that. Tomorrow, if I expect the market to go down, if that happens, if I see the market pulling back because of something Powell says or the FOMC minutes, then I'm going to say, all right, I know what was weak. What is weak, right? It's consolidating, so it's not weak. But again, the market's up and this is down. I'm going to look to short this. I'm going to want to look to be long the semiconductors. They're strong. Look at the semiconductors making new highs. So there's my long right there. SMH would be semiconductors. KRE is my short. So therefore I'm hedged. If the market goes up, I'm long the semis, which are leading right now. And if something changes, I have a short on, which would be the banks. Regionals are underperforming. I'm winning there. All right. That's how, it's how I was kind of taught to look at it. You could also look at, you want to look at Bitcoin because that's also a risk on or risk off asset. Whether, you think it's an asset or not, it's still a risk asset that people buy and sell. And ARK, ARKK. The last two of those would be the equal weighted S&P, which is also green. So that means there's a broad participation in this rally. And same for the Qs. Equally weighted means that it's not just in the SPY like AMD, Amazon, Apple, right? That have the biggest weighting in the S&P. So if it goes up, the S&P goes up. The equal weighting is everything is equally weighted. There is no over or under performance, or there's no, because of it. So that's also good to look at, right? If you see the SPY making highs and everybody's talking about, it's just the top 7 stocks. Well, if it is, then why is the RSP going up? Why is the equally weighted going up? That's telling you there's a broad participation of buying. So, but I'm going to get more into like my game plan for tomorrow, where I want to be. I hate to do it, but I got to hold this thing. I don't want to lose anymore. It's a small position, but seeing that the Qs are where they are, it's like, I feel like if I'm going to sell this, let me see if I can look at the volume here and really get a, because that's where you're going to really get it's going to tell you the breadth underneath. And I know this is a low volume push up. I feel like I have it in my mind. I don't want to fight the trend, and that's what I'm doing right now, is fighting the trend. Like, look at this rally. Look at that. Taking pre-market off. Look at this. Things happen pre-market and post-market, but what happens from 9:30 to 4 is what you want to worry about. And we have just been, since Thursday, Friday, Monday, Tuesday, we have just put our foot in the ground and we have just started making that next leg higher. And what this is a consolidation. We rallied, right? It rallied, consolidated, and now it's trying to make it another leg higher. So I feel like I can't fight it. And I know this is a lot. I'm not just talking to you, but in particular, the Euro market, Germany, Europe, Japan, right? Those markets are making new highs. So this is also making me want to take this put off. If I go to a daily chart, look, they're making new highs. So the U.S. is good, surely to follow, right? They're at new highs. They've made fresh all-time highs. The DAX, right? The German market, all-time highs, right? This was prior highs, blasted right through it. And that's what, that could be here in another month or two for the United States. I don't know about a month or two, but, we're following that. So, that's, maybe I take this thing off and take a 10-cent loss, because I can put it back on if we start. It's just, I don't want to take it off, and then here we are, as soon as I take it off, it starts pulling back, and I want to at least try to get a break even on this, because I think we can get a pullback. It's a low volume push higher. This is options, right? This is options, right? I don't have momentum. I'm trying to just put something on because it was cheap, and that if I get that sell-off because of Powell, I'm doing all right. I'll be doing all right. So let's see what happens. I'll keep it on. If I sell it, I'll let you guys know. But yeah. If you guys have any other questions, I'm here. All right. Let's what I'm going to do is I'm going to turn on CNBC and see what some of these I like watching the closing bell because you know they're going to talk Powell, you're going to get some financial analyst on, and let's see what they have to say. Liz Ann Saunders is she's one of my favorites. She's really smart. Oh, both of them. This guy's a semiconductor guy too. Come on, connect.
Looks like this. We are in the green as we begin the final.
All right, good luck
stretch.
into the
Pretty
close,
benign
guys. I'm
CPI
here. If
report
anybody has
today.
any
All
questions,
eyes
if you
now,
guys
of
would
course,
like,
on tomorrow's
you know,
Fed
if you guys learned
decision
something
and
or want to
Chair
hit the
Powell's
like
presser.
button,
Interest rates, they are holding
subscribe,
steady
be greatly
ahead of
appreciated.
all of that. We're watching that closely too, and it all takes us to our talk of the tape, the upper hand, and whether the bulls firmly have it. Let's welcome Schwab's chief investment strategist, Liz Ann Saunders, and the founder and CEO of Trivariate, Adam Parker. He's also a CNBC contributor. Both are with me here at Post 9.
Yeah, Adam Parker
so
here.
thrilled
He is
about.
actually
Nice to see you both.
he's an
Liz Ann,
analyst
so
for
you first.
semiconductors
What's
and
gonna happen
technology
tomorrow?
stocks.
What's the chair going to say? Is he going to rain on this market parade or keep it going?
That's the open question. Whether he does it overtly by actually raining on the parade and pushing back against the expectation of cuts starting possibly as early as March, or he just maybe gets at it by citing what has already been a massive loosening in financial conditions. In fact, it was a record single month in November.
Well, because rates came down so much?
And he may hint that that's doing some of the prospective easing. So that's, to me, what I'm going to be focused on is whether he sort of does the opposite of what he did when he said that the move up in yields had done some of the tightening for the Fed.
What about you, Adam? What are you looking for?
All right, so Nvidia's at a spot to pull back. Let's see how many other stocks we have that are at areas to pull back, and that'll help tell me whether the Qs and the SPY should take this last hour of the market and pull themselves back.
You don't even want them to cut rates. You want to dream that they could do it.
We'll go to healthcare, banks, and technology. Those are the three biggest weightings.
What if they cut for the right reasons? I mean, you're assuming they cut because they have to.
There are no right reasons, right? The right reasons would be the economy is in bad shape. And
no, it isn't if the inflation's come down enough and the economy's doing pretty well.
I'm not a Fed genius like everyone else on this program has been for you. What I'll tell you is what I learned back in the day is full employment, stable pricing. Which one looks so bad they need to start cutting rates like crazy? Which one looks so bad they're going to have 5 cuts by January 25 or whatever's in the price? What I think the bull case is, you think gross margins can expand for the average stock, and you dream that there's a combination coming someday without it happening. To me, that's the sustained Goldilocks we've been in. That's what I'm rooting for, is equities go higher.
Well, what about the idea, though, that the economy stays reasonably well, inflation continues to trend lower year over year, of course it is, despite a month, 0.1% pop in November, that the Fed actually can cut for the right reasons, that inflation has allowed them to do that. They don't have to because the economy is doing just fine.
But if inflation is still above their target and their other mandate is not in the clear spotlight, meaning the labor market hasn't deteriorated, Powell has been really clear about not wanting to repeat the mistakes of the Burns era and declaring victory prematurely and then easing and letting inflation out of the bag again. So I think it's going to be the labor market that dictates the point at which the Fed goes from pause to pivot.
Has the rally from November to now and how it's become more broad?
Look at that volume.
More recently, has it surprised you?
Shit.
No,
Right,
in fact, I think it was a necessary ingredient for sustainability of the rally. You and I talked about it right around the 1-year point off the October lows, and it wasn't looking great then. Small caps were anemic.
Hold on,
banks were still in negative territory. The concentration problem.
Let me figure out what I'm going to do
because stealthy rotation where you ease some of the excesses associated with the concentration without the bottom falling out all at once. So far so good. It's nice to see that.
Yeah, I mean, there's a statistically significant relationship between the change in the CPI and
Wow,
the change in gross
it's really
margins for the
going.
average
I'm going to
company.
take this off
So when
right
CPI
now,
ripped
guys.
higher, it hurt
All right.
profits and
Wow,
it relatively
29
hurt the small
cents.
caps.
Let's do
We know
it.
the big seven,
All right,
they didn't
I'm
really
out
get
of
affected
that.
by rising CPI. They have a whole bunch of pricing
A little
power
more
and
than I
other
wanted
strengths of being big.
to lose,
So
but
if you want the
it
market
is
to
what it
rally
is.
and you want a sustained broadening
You know,
rally,
that-
you need
that
to believe gross margins are
volume
going up.
on
So
that-
that's where I spend most of my
that
time
feels
with
to
my
me,
clients.
you know,
is it
you get
lowering
that,
input costs? Is it productivity? Is labor, you know,
let me bring up
increases,
the chart
less
for you.
of a problem? Is it materials?
You kind
that
of
are
just
logistic?
got
Like, which companies can beat
carried
gross margin
away there.
expectations?
That
Those
was
are gonna be
Max
winners
Payne
next
right
year.
Do you
there.
feel like it's
Look
time
at
to be
that.
more bullish overall?
We talked
Right.
about this last week, and then I went home and
Like I said, if the Qs were already up here, the SPY is going to go there
I've been
too.
bullish the whole year, so I'm like incrementally
So
bullish.
if
up
we know the
35,
Qs are
40,
leading,
NASDAQ up
I'll look at the
21, 22
Qs,
total return S&P.
and I'm going to see if they start to pull back
You know,
and
you
sell
want to be
off.
bullish the whole
Then
time.
I'm
I don't think we're
going
going to have as
to,
much upside in the next
you know,
12 months as we had
say,
in
hey,
the last 12. So
Qs
you're
are
talking
pulling
to somebody
back.
who looks at the
That'll
word
help
incrementally
the
and
SPY
says no,
trade.
because incrementally it won't be
But-
as much upside.
Well, we
Am
didn't
I
have-
optimistic? Risk reward? Yeah, I think so.
But we didn't have that much upside over
I'll
the
just
last
have to
12
wait
months
for the
in a
momentum.
large part of the market. We had most
just
of
have
it
to wait
in
for
the
the
top
momentum
heavy
to
part,
come in to get
and only
short.
of late have we started
And
to
not
kind
try
of
to
catch
get
up
ahead
a
of the
little bit. It's not
trade.
even that much.
Nobody who allocates to an equity manager gives them that break. Okay, their benchmark's the S&P. It's up 22 total return or whatever it is. That's what they're compared against. So I think what people want when they charge high fees is they want the broadening rally so they can get in there and find alpha on smaller names. It's hard for them to know stuff about the big seven nobody else does. But I'm reacting to the overall indices being up this much and saying, right, am I incrementally more excited? No. Do I think the risk reward could be? Look, you know I hate romanticizing about contrarian. Everyone says I'm contrarian, then they repeat the consensus. I do think that the risk reward could be skewed to the upside next year if the average stock gets more margin expansion and if we start believing earnings could grow 3, 4, 5 years in a row. And if that's the case, things look optically expensive now, but middle of 24, you'll be saying,
here's
oh,
the
maybe
next
25,
one.
26, it looks cheap. And that's the recipe for a bigger rally.
The
that people
Qs
think. I
are
think
up
that's the
here,
tenor of your
and
question.
this area
so
right
many
here
people
is
ask you that
470
question,
for the
should
SPY.
I
That's
become more
400 for the
bullish?
Qs and
Based on
470
what,
for the
your company
SPY.
does. Is it time to be more bullish in the outlook for stocks or not? We've come a long way. Market's done
Look
really
at all these
well
gaps. Boom,
of
boom, boom.
late.
Gaps,
It was
gaps,
very
gaps,
top heavy.
gaps.
Now it's broad. Is it believable?
So tell me what the bond market's going to do, and I'd be able to probably tell you what the stock
Man,
market's
the
going to do.
Qs
I still
never
think bond
pulled
yields
back
are,
to
for the
that
most part, in
area.
the driver's seat. We have a negative correlation between yields and stock prices. I think a plunge in yields
This
from
feels
here,
like
assuming it reflected a
a-
much weaker economy, that would be a digestion phase for the market. But
This
even
really, to
stabilization
me,
in
guys,
yields, I
this
think,
really
would
feels
represent
like a
positive backdrop. On the upside,
a
then I
blow
think
off
you have
top.
the
It's
risk of
starting to
another,
be a little
you know, July to October.
Do you worry about that though? I mean, do you
much,
think
and that's
that rates
it,
have kind
you know,
of?
I'm bullish. I am bullish.
Since, what, in the last
Right,
6
the
weeks?
dollar
I mean,
and
they're-
yields are
what,
pulling
they're
back,
5%,
so
down like 80 basis
you
points.
can't argue with the
question
price action.
Is it true that the last mile in terms of getting inflation down is going to be the trickier one? We don't think we think inflation will continue to come down, but probably not in a straight line. And you've got obviously the energy swing factor, which impacts headline inflation, not core inflation. But I agree with Adam. I think a scenario in which the Fed is actually cutting as soon as March is not a good scenario in terms of what is probably going on in the economy.
That seems a little bit ahead of ourselves anyway.
Yeah.
Right, when the market was saying March and the probability started to go up into the high 30s, you're like, really? Now, obviously, it's backed off that, so we're at June. That makes sense?
Well, this morning it was still 45% probability of a cut in March. I think that's pretty mature.
I think I saw 5 cuts by end of next year. So to me, the economy and corporate earnings have to get much worse. And I don't think everyone's going to just, you know, whistle by that graveyard the entire year. So I don't think you want things to get like that. I think you want to believe earnings can grow a little bit, and there's someday they'll be more accommodative, and that's the cocktail.
Hey, there are some people who think earnings are going to grow a lot. I mean, I've had very bullish people
Well,
on
the
this set.
consensus suggests that, but I think the consensus is not realistic. And I don't mean it's too high. I just think what's happened in this unique cycle, and it's a vestige of the worst part of the pandemic when analysts were getting no guidance from companies. Now I think they're adjusting estimates much nearer term. You'll get into earnings season, they might make an adjustment to 1 quarter out, but they're not making those adjustments. So I'm not sure how valid the calendar year 2024 estimates are. They haven't moved. The quarterly estimates are moving up and down a lot. So I'm not sure it's valid valuation analysis using a calendar year number for 2024.
Yeah,
it's not based on reality.
I don't think it actually matters. What matters is, do you believe earnings are going to be higher, right? You know, because on average.
Well, do you believe they're going to be double-digit higher? Because that's sort of where we're thinking. That's where the market's
betting.
betting.
Consensus is 11. I don't think that's right. I think it'll be mid-singles or maybe a little bit higher, maybe 6-7%. So I think 11's too high. If you look back, I think forward earnings data have existed since 1978. On average,
LQD is still, at the end of the day, until it breaks above this 108 level,
the actual's been
it's
7.
still making
Obviously, the
lower
market's gone
highs,
up
believe it
a lot
or
of those
not.
years since 1978.
Believe it or
so
not.
I think she's spot on. It's not the downward revision that matters. It's as long as it's being downward revised, you think the growth is still going to happen.
LQD is corporate
markets
debt.
can do okay in those conditions.
Did I hear you like making the case for small caps?
Smaller. I think there's opportunities, but stay up in quality. I would absolutely fade the low quality areas, just smaller. I think there's opportunities. I think there's a lot of active money, both professional and individual, that is itching to find opportunities outside just the Magnificent Seven. Continue to think you want to be much more factor focused than sector focused. You know, strong ROE, strong free cash flow, interest coverage, profitability. And I think that's the way to approach it. And there's opportunities down the cap sector. I wouldn't index to a Russell 2000. There's no profitability filter. Still 32% zombies. But I think there are opportunities outside of the mega cap names.
Speaking of like energy, which you've liked, are you still on that train? Or are you about to hop off?
No. I two things. One, I parse the quality thing a tiny bit, which is I think in growth stocks you want high quality. And that's 2/3 of the battle if you're trying to beat the S&P.
A lot of the other stuff has rallied a ton, though,
I think
in growth.
And in value stocks, you don't necessarily over time want high quality. You want future quality that doesn't look like it today. So when you define it systematically, you don't want quality across the board. You want growth quality over time. In terms of energy, look, my view is that we're short being able to produce 107 million barrels in 5 or 10 years, and the path toward getting there is unclear. So I think ultimately demand will exceed supply. The thing that worries me tactically is the same thing what worries everyone else, which is Hess sold to Chevron without a premium. And so when you start thinking about it, probably knows his assets better than they do, and he probably thinks he can sell it without damaging Chevron stock as much as damaging his own. Like this, underneath tactically, it's not great, but I don't see how we get 107 million barrels down the line. So ultimately, we're going to have much higher oil, but the path from here to there can always be filled with 19 hard to predict variables. So I like it long term, but I have no idea about 3-month view.
But when you're talking about quality growth, so I know we've been obsessed with the Magnificent Seven, and the performance has been incredible, but of late, all those other growth stocks have done incredibly well. Like the ARC type names they just had their best month ever in November.
Right. Well, when the bond yields come down, she's spot on. You had the highest correlation you've had in years between negative if you look at yields versus equities. What happened is all the riskier companies, where more of the value is way out in the future, they go up because their cost of capital came down.
Sure, but what if rates stay low?
So
lower.
Look, we didn't pre-prepare, and I usually disagree with people, and it gets a little awkward. In this case, we agree a lot because I think if they plummet, it's because the conditions in the economy got much worse, and it's really a risk.
If rates plummet,
if the 10-year yield goes to 3 or 2.5 in a hurry, that's because things get bad.
Well, of course,
if it stabilizes where we are here, and maybe the 2-year comes in, you uninvert eventually. That I think could be, very supportive of higher multiples for equity. So I think that's where, I agree. If you can tell me the exact mapping of the 210 level and slope, I could probably do okay picking stocks.
What about one thing we have to do though? Anytime we talk about growth and value, explain what you mean by growth and value. Are you talking about indexes? Or are you talking about the factors of growth and value? If you remember, we may have talked about this mid-December last year when S&P did their rebalancing. The mega cap 8 were all in S&P's pure growth index. On December 19th, the day of the rebalancing, only one was left in the pure growth index. Tech went from being 37% of that index to 13% of that index. Energy became the highest weighted sector in S&P pure growth. In part because of that, Russell 1000 growth is up 37% year to date. S&P pure growth is up 2% year to date. So when people just say growth and value, I always think, what are you talking about? Are you talking about the characteristics? Are you talking about our preconceived notions of what are growth and value? Even if you're talking about the indexes, what indexes?
Yeah, we're at Trivary, we're nerds, right? It's all systematically assigned, it's mutually exclusive and exhaustive, and you can't both be in growth and value like Russell used to have with Exxon or whatever. So for us, it's not that shocking. I mean, if you grow fast, you don't have a dividend, you don't have any debt, you're expensive, you're a growth stock. So it's all systematic, but it's probably pretty correlated.
The problem is that if you're not a growth stock, you're put in a value index. You don't necessarily offer value.
It's funny,
You're just not a growth stock.
We do it for this reason in thirds. We have like a growth, neither, and value, because I think that neither zone is a little bit different. But, so I think we're getting the same answer, maybe showing our work a little differently on the path.
What's the point at which, Lizanne, I'll ask you first, that money comes out of money markets and then goes into equities, and that sort of spurs the next leg of whatever kind of market, whatever kind of bull market this may be, if in fact this can hold up?
But
are we approaching that point?
Strong too. So I'm not sure a lot of the money in money markets is the traditional sideline cash that's itching to go into equities.
Even this time, where that there was so much money in cash?
Has come from maybe other areas, typical deposits, other areas even within fixed income or the equity market, where a lot of income-oriented investors are saying, now I can actually get 4 or 5% in a money market. There was that sort of similar size in relative terms of capital in money markets in the 90s, and it didn't leave. But you had a strong equity market, and you had sort of this meaty amount of money in money markets. And I'm not sure we should necessarily think of it as some moment in time source that's going to fly into the equity market. I think it's probably pretty sticky.
The world's so much different than it used to be, where you could really bank on these flows from across asset allocation or regional allocation. I mean, pick one multi-strat or pod shop. Pick any one. They have 35 quant teams. Those teams are running 600 to 1,200 gross exposure, hundreds of longs, hundreds of shorts, and they have 3-hour to 2-day holding period.
You hear that?
That's what's happening.
Yeah, but I'm saying maybe this time is in fact
Shitload
different.
of longs
we know
and shorts.
that because
Gotta
rates
have your
were
hedges.
so elevated that
you want to
putting
get
your
that
money
equity
in
curve
a
up.
money market where you could get 4 or 5% was so much. The risk reward on that was so much higher than taking what seemed to be a tremendous risk in equities because of the Fed's regime of hiking. So if we know that there was an outsized amount of money that went into money markets, if the coast is deemed clear, why wouldn't that money go in? And by the way, maybe it goes to bonds too, if you think that yields are going to continue to come down and bond prices are going to go up.
Yeah, I mean, I think there's two different issues. Like, it's all horizon, right? I mean, I don't know any actual human being who buys the 10-year and holds it to duration. I mean, unless
at Schwab we do.
Well, my
Take that.
Right, but at Schwab, when you run like 40 trillion or whatever, and then there's going to be trillions that are holding it. But like, to me, I could see somebody saying, I'll buy it tactically or something, or I could see holding the 2-year or something like that to duration to pick it up. But to me, that's like a small part of what's. You asked about inflows into equities driving a much bigger equity market.
Right. Also, keep in mind, though, for all the talk about the record amount of money in money markets, as a share of equity market total capitalization, it's fairly small. So the firepower has to be judged with that ratio in mind, not just the dollar level of what's in money market funds.
I'm going to leave it there. You guys were great. It was so much fun having both of you here in the house. Lizanne Saunders.
Happy holidays.
Trivarius Adam Park. Yeah, of course, to you both as well.
Thank you.
Thank you. We'll talk to you again soon. We're just getting started here on Closing Bell. Up next, a must-see exclusive, Goldman Sachs President and COO John Waldron. He joins me right here at Post 9. We'll get his exclusive take on the markets, the economy, the Fed, and the firm. Just after this break, we're live from the New York Stock Exchange. You're watching Closing Bell on CNBC. Welcome back to Closing Bell. Stocks in the green today as the Fed kicks off its two.
I have to give Jan Hatzius a shout out. Jan Hatzius has been very much on the soft landing.
He sure has. He keeps lowering his probabilities of a recession.
He was early, and he's gotten more bullish as it's gone on, and he's been right. And a number of us in the practitioner, mode, were a little bit more cautious and have been a little bit more, that's not pessimistic, but more concerned. And we've all moved a little bit to the more positive side. I think the U.S. consumer came into this in a much stronger position than any of us gave the U.S. consumer credit, and that's had a huge impact on consumer behavior. And obviously, it's a 70% the consumer, 70% of the economy. So that, as goes the consumer, so goes the economy.
How about the markets? Have they surprised you? I mean, if I told you at the beginning of the year, we sat down, I'm like, okay, the Fed is going to hike as much as they did. The economy is going to hang in there, and the stock market is going to have, for all intents and purposes, a great year, especially lately. It's become more broad. You would have told me at the beginning of the year if I said that, what?
I would have said it would have been a tougher year in the markets. Now, I think what's interesting in the equity markets is the performance of those 7 stocks versus the rest of the marketplace. There has been more damage in the equity market in terms of some of those non-7 stocks. So if you look at the 493 stocks, the average multiple is quite a bit lower. I think it's at 14.5 times.
14, 15, yeah.
Right, so it's quite a bit lower. So it actually looks relatively inexpensive. But a lot of the stocks have come down a lot. So there's a lot more dispersion. This was a less of a trend market and much more of a market, evidenced by dispersion. And so that's not surprising. The 7 stocks are surprising. The fact that some of these other stocks have had a harder time this year is not surprising.
Are you a believer in the broadening that we've seen of late? Because that's kind of what's taken us toward this next leg. November was amazing for all of these other areas of the market, the equal weight S&P outperforming just about everything else.
Yeah, it seems that it needs to happen. The market needs to get broader. That seems to be the right direction of travel. I'm not a portfolio strategist, but I think David Costin, who's our strategist, would agree with that our projection and prediction is that there'll be more broadening in the market, and that I think that would be healthy for the market.
I know you were just in China, and that's been really confounding to a lot of people. We've had this recovery here. Europe, I think, has done better than expected as well, and China remains this sputtering story. You're just there. What'd you see?
Economy's very weak. I think they're surprised by how weak it is. These other economies coming out of COVID had a V-shaped recovery. China's really the only major economy that has not experienced a V-shaped recovery. They didn't stimulate, so I think one major difference is that there wasn't a significant amount of fiscal or monetary stimulus to aid that recovery. And obviously they're weighed down by a significant number of challenges. The property sector issues are real. A lot of the growth that we witnessed in China for the last 5 or 10 years was real estate and property growth, and obviously that's coming home to roost now. The FDI challenges are real. You know, money is flowing out of China, not into China. That's not helping their cause. My experience when I was there was it almost felt like there was negative animal spirits. You know, you feel like in the U.S. we had positive animal spirits as the economy was coming back from COVID. I feel like it's the opposite in China. So I think they're going to have a tough time. I think that they're going to have to tackle some real structural challenges. I think they're focused on that, and they're going to get after it, but it's going to take a while, and I feel like they're going to grow below trend for a fair period of time.
Why isn't that having more of an impact here? You used to say, well, China sneezes, the rest of the world catches a cold. Now it seems China's got a pretty good cold, and yet here we are.
Well, the U.S. consumer is still, to me, the most important factor in terms of U.S. economic performance, not China. It's really the U.S. consumer. The U.S. consumer, as we talked about, is doing well. By the way, Europe is having a tough time. So I would say the European economies are not exactly firing on all cylinders. So I think some of what we're seeing in China is impacting other economies. I just think the U.S. right now is really outperforming because the U.S. consumer is surprising everybody in terms of the resilience of the spend.
Let's talk about the markets as it relates to your business directly at Goldman. We keep wondering when we're going to see this new flood of M&A. What's you see? Michael Arrighetti of Ares was on the network, several hours ago today, said he's seeing a pickup. What are you seeing? I mean, it's bread and butter business.
Market, if you think about the M&A market, there are kind of three pieces to it, simplistically the way I think about it. There's large deals. There's the kind of middle market, which is increasingly governed by private equity flow. The private equity market has gotten to upwards of 40% of the total volume in the market in the last few years, which is abnormally high. And then you've got sort of smaller, niche-y corporate deals. The smaller, niche-y corporate deals are pretty healthy, pretty active flow, pretty active pipeline. Corporates want to do deals. Positioning going on around portfolios, and that continues to be good. Larger deals require regulatory approval. That's getting harder, and still on the better. We saw a couple big energy deals of late. There was another energy deal, and seeing some deals, but it's not as strong as it has been historically. And the private equity community, I like the fact that Mike Arrighetti said that he sees a pickup. We see a pickup, but I wouldn't call it a significant pickup. I would call it the beginning signs of a pickup.
When do you think it will become significant?
I feel like it's going to take a while to get going. I think they're still trying to figure out how to find equilibrium in those portfolio companies. There is $9 trillion company value sitting in private equity hands. That's an enormous amount of installed base of activity that is going to come in the next few years. But I don't think the gun goes off on January 1 that it all take a while to get on track. Financing, price, buyers and sellers have to come together. There is a lot of liquidity that needs to be. That's a catalyst and a stimulant, but it's not going to happen overnight. I think it's going to take a little bit of time to build.
What does it tell you that, I mean, there have been instances, and many really to this point, where companies have pushed back on the government and won. Does that in any way you think embolden people to do deals that they didn't think they could do, that now they're willing to have a fight?
I think that certain companies will be interested in doing that, but I don't think as a broad-based trend most companies want to sue the government to get their deal done. So I still think it has a negative impact overall on large deal activity. It doesn't mean that there aren't exceptions to the rule. It doesn't mean that people aren't going to sue and win. But most of the time, if you're in a corporate boardroom and you're trying to advocate for a transaction, that's not the way that you advocate to get a transaction done. And so I think broadly it still has on the margin, a negative impact on the marketplace.
What about the IPO window? How firmly do you think it starts to open, and when?
We're getting more bullish on the IPO window. I think, if you think about the capital markets broadly, whether it's equity or debt, we're at half the 10-year averages. So we're running at a very low level of activity and have really for the last 18 to 24 months. It's been pretty persistent for a long time. As I said to you about private equity also is a big stimulant to the capital markets activity. The refinancing wall that is coming in particular private equity owned assets is pronounced. So this year in 23, $13 billion of refinancing in high yield and leveraged loan markets. 24, $75 billion. 25, $220 billion, 26, over $400 billion. So there's an enormous amount of refinancing that has to happen. Some of that will get refinanced in the debt market. Some of that will require IPOs and other monetizations. Some of that will be M&A. So we're getting more optimistic that is going to start kicking into gear. And as we've now gone through the rate increases to more of an equilibrium, people adjust, prices adjust, and mindsets adjust. So we're getting closer to seeing a window opening for the IPO market.
Okay, big story today for you guys. Ed Emerson runs your commodities trading business, stepping down, said to be close
Just
to
eating
you.
a bowl of cereal.
Why is he stepping
Just
down?
Give me a second.
Well, first thing I would say is our commodities franchise is terrific, has performed exceptionally well, and Ed's done a great job.
Well, he's gotten paid a lot, $100 million over the past 3 years.
Ed's done a great job, but it's a very deep team. As with everything at Goldman Sachs, we have a very broad and deep team. Our leadership across commodities is incredibly strong. It's a very global franchise. We've got strong leaders in the U.S., strong leaders in Europe, strong leaders in Asia. Very excited about the team we've got in place right now to go lead that franchise going forward. Ed's decided he wants to go on to the next thing in life. That happens at Goldman Sachs. He's not the first, nor will he be the last person to do that. We wish him well. He's going to stay on for an extra year and help us in the transition, which is terrific, and I think it will work exceptionally well for us. So we're ready to move that franchise forward, and I think the franchise is going to perform exceptionally well.
He was said to be a fairly vocal critic of David Solomon's leadership. Does that have anything to do with him stepping down?
No, I don't think so. I think Ed was getting to a place in his career where he was deciding what he wanted to do next, and I don't think it's any more complicated than that. And I think he'll be a great leader. He'll transition well. He'll make sure the business is in good hands. I think Ed cares a lot about that commodities franchise, cares a lot about how it transitions, and cares a lot about Goldman Sachs.
Speaking of criticism of Mr. Solomon, how would you assess what the last year has been like for the executive team? The criticism, the controversy, did it hurt your ability to focus? What are your thoughts?
Well, I would observe we've accomplished a lot in 2023. It's a little bit of an eat your broccoli year at Goldman Sachs. We had a lot to do. None of it was particularly rewarding on the surface. We had a lot to do under the covers. We repositioned our consumer franchise pretty significantly. We sold a number of assets. We sold our Green Sky business. We sold our United Capital business. We sold our Marcus lending platform. We sold approximately $10 billion.
No, it's a virtual microphone. You can put it right on your, yep. You can even hold it if you want.
Okay. We sold $10 billion of real estate.
Yeah.
And we've taken about $1 billion of operating expense out of the firm, which gives us flexibility to invest back into our talent, into our people. So we've accomplished a lot this year. It's clearly been a transition year, and we've got a lot in front of us in 24 and 25 that we're very excited about.
Yeah, I mean, you've been overhauling your asset and wealth management businesses. You know, care that it's live TV because we're going to do it anyway to make sure it works out the right way. How about that?
Thank you, Scott.
Yeah, I mean, you've been overhauling your asset and wealth management businesses. You've seen, several people leave on that front. Top level talent to move on?
No, I think we've got a strong leadership team at the top of the firm. It doesn't mean that there won't be people leaving. There are always people leaving at Goldman Sachs. It's a process of our next generation leadership rising, into new. Our asset and wealth management business has gone through a significant amount of transition. If you think about what we've done there, we've merged internally 4 different businesses into one integrated platform. So you can almost think about it as having done 4 mergers, in essence. There's a lot of integration in the context of doing that. So there are going to be changes anytime you do something like that, whether it's an internal set of mergers or an external set of mergers. We've got a great team on the field. The business is performing. We will have raised $60 or so billion of alternative assets on that platform this year. Our management fee target of $2 billion of alternatives will be hit this year. We're close to our $10 billion target overall. Our wealth management business is going to grow high single digits this year. Businesses are really performing. We've had an excellent year. I know there's a lot of focus and inquiry in the press around people leaving, coming and going, but the businesses actually are performing well, and our team is extremely motivated to drive that franchise forward.
Do you feel like the firm is right-sized now? No more layoffs we should expect from what was already announced?
We reduced our headcount about 3,000 people this year.
That was the largest since the financial crisis.
That was necessary.
Right?
Like a lot of companies, I think a lot of clients that I talked to were adding a lot of heads. During the COVID period and into that recovery period, and I think everybody needed to kind of rationalize what they had done. We're no different. I feel very good about our headcount right now. I think we're in a good place. We can grow from here in a measured way, obviously dependent on how the economy does and how the marketplace does, but I feel very good about where we're sized right now.
What about you? You happy? You gonna be there for a while?
I'm happy. I'm looking forward. I'm very interested in 2024 for Goldman Sachs. I think we've got a real opportunity in front of us, and I intend to be very focused on helping us deliver on it.
All right, I appreciate you spending time with me here on Closing Bell. Thank you.
Good to be with you. Thanks.
Yep, that's Goldman's John Waldron joining us right here at Post 9. We do everything. We have conversations, we fix microphones, we do whatever we have to do. Up next, forecasting the Fed. T-Row Sebastian Page is back. We'll find out what he's expecting from Chair Powell tomorrow, how he's navigating the market as well as we round out the year right after the break.
Sorry, guys. I was just trying to eat, and then my cat was just going crazy. She's wanting food that I don't have for her, and all this other stuff. She's just being picky right now. And she's... Hey. You're okay. Alright? I know.
CNBC.
Stocks are higher today as investors react to the latest CPI report ahead of tomorrow's policy announcement from the Fed. Joining me now to discuss, Sebastian Page, the Chief Investment Officer for T. Rowe Price. Welcome back.
Thank you, Scott.
All right, so let's talk in stages from reluctant bear to neutral on stocks. Now, where are you today?
So we're still neutral on stocks. And I've been watching your lunchtime show and your conversation with Liz Ann and Adam earlier. And, you know, it's all about those long and variable lags. You have to worry about those. And that's keeping us from going all the way full bull long stocks. And, you know, at the same time, I think you called it the big mattress of money that's cushioning the economy into this landing here. Tells us that things should be okay. And the Fed is, you know, about to cut rates.
Yeah, but what makes you think that the lag effects are still going to have...
Motherfuckers ain't cutting rates suit rate.
Maybe
close.
what the Fed's done...
If I had this, if you guys want my
impact,
opinion.
So you're not going to have the big
Wrong.
effect that the more cautious market observers seem to think is still to come.
Look, I expect a soft landing, but I think the risk there is look at, for example, credit card debt, or look at weak companies that need to roll their debt into much higher interest rates. Or look at
some companies are going to
real
have that.
estate.
They
So
could possibly
there's
have
still
that
fragilities,
have that
and
problem if they
again,
run out
it
of
feels
money.
comfortable and at neutral. It's kind of the return of the balanced approach. We're
But
going to
that's how
get
you
some
bring
volatility on
inflation down.
growth, but the most of the volatility on inflation is kind of gone. At least the crazy volatility in inflation. So it just feels like a neutral kind of environment here as we get more data come in. But yes, Scott, I mean, those lags have hit on a rolling basis. They will probably continue to hit on a rolling basis, which, you know, means there's still some fragilities in markets.
I just find it interesting that somebody who suggests that we're going to have a soft landing isn't more positive on stocks. One would seem to naturally follow the other. By the time you get, you know, overweight or whatever
We did have
language you
financial
would use to
conditions
describe
easing.
a more positive
He
view,
is
the
right
market
about
would have
that. I
gotten
think he's
just
gonna get
further
into
away
it
from
now.
you, no?
Yeah, and look, Scott, here's a different way in which we're positive. We're actually long small and mid caps under the hood, slightly short duration, long credit, long emerging markets. So we like to take the long risk positions where relative valuations are more attractive. So you keep it neutral on top, but under the hood, you could add some octane in there and just recognize that this is kind of a balanced outlook. Scott, bottom line is a lot of it is priced in. You know, in November, we just had the record easing in financial conditions, the largest 1 month easing in financial conditions in November. The dollar pulled back, equities rallied, spreads compressed, rates came down. I'm not sure that's what the Fed wanted, Scott.
We'll see. We'll see, and I guess we'll hear from the chair himself tomorrow, and we can't wait for that. Sebastian, thank you. I appreciate it. Sebastian Page.
Well, if the Fed doesn't want that, then they got to take away this, because this is telling them there's no
We've
risk.
got two companies and
The
two
Fed is
sudden
there
C-suite
doing whatever they need to
departures,
do
and that's rocking
to
the
help
share
these banks
prices.
out.
I'll reveal the company names
Right?
next.
It's just getting higher and higher. They're giving this is the Fed's bank term funding program for that they set up for SVB and First Republic and all that stuff. That pretty much said, hey, if you guys need to start selling bonds because you need to raise capital, then here you are. And guess what? They are still needing to borrow more money. More and more and more and more. I don't know what the projections are on this. Maybe we can look into it. That's something I could look into. We'll get those questions tomorrow, probably. You know, let's see if somebody asks the important questions. You know, how much do you think that they're going to have to, you know, fork out? Do they have an idea, right? If they don't, then how high are they willing to take this? So I'll have to look into it myself if they don't ask those questions. But this is telling you that banks still need more liquidity because it's just going higher and higher and higher. So the banks are needing more and more money. So yeah, that's about it, I guess, guys. Let's see how we close. We got 15 minutes left. Another red day for me. I tried to put on a position, but I just can't sit through that. And look, here we are. We're pulling back down the spot. So these contracts are still at 30 cents. I could get back in where I exited, and I would just be paying up commissions. Well, yeah, I would be paying commissions. I can't say that because it would still be a loss because I bought and sold already for a profit, small profit, and then sold for a loss. But yeah, I would be paying just really commissions to get back in this. So yeah, I'm not sure what time I'm going to have the live. It'll probably be at like 8 o'clock, I'd say. Let me run through some of these charts. Let me come up with some ideas. Let me go through like the broader market this afternoon, oil, banks, like, you know, and come up with a game plan for tomorrow and for the end of the week. So that is my plan. I'll probably get up out of here. There's probably not anyone on here. Thank you guys so much for stopping by. I want to have a home run week. I'm aiming to have a home run week, and that's my goal this week, to have a nice week. If the market, presents itself, if I can put myself in the right parts of the market to capitalize on that. Look at CRM. Friday. I have to do some more on this. That's so. Oh, I was on a weekly chart. That's why.
The company says it's increasing its focus on vaccine sales, which will now be overseen by its CEO. Those shares down 50% this year, trading over 5% lower right now. Scott?
All right, Christina, thank you. As always, still ahead. Kava shares
The Fiber Freelance.
We're less than 15 from the
noticed
closing bell.
Kava
Christina Prestinevelos
yesterday.
joins us once again with the stocks she's watching. Christina.
Wow,
Let's
look
start
at
with Lucid
Kava.
Group under
I
pressure
missed
after
that this
announcing the
morning. I
abrupt
heard it
exit of
going
its
off on the
chief financial
scanners.
officer. The company says it's already searching for a replacement CFO and that its vice president of accounting will fill in the role for the time being, and that's why you're seeing shares off almost, or 8.5% right now. And Moderna, also in the red after a sudden executive exit. Its chief commercial officer is stepping down after less than 2 years on the job. The company says it's increasing its focus on vaccine sales, which will now be overseen by its CEO. Those shares down 50% this year, trading over 5% lower right now. Scott?
All right, Christina, thank you. As always, still ahead. Kava shares are surging. The stock is now up more than 16% as the company's IPO lockup expires today. All the details ahead. Closing bell right back.
How does Klein Inspector get among the most big verdicts and settlements of any law firm in the country? Because Klein Inspector is an award-winning team with 5 doctor lawyers. The most of any firm.
All right, so there was no news on this thing.
And that's why the New York Times calls Klein Inspector a powerhouse law firm. So if a defective product.
All right, there's no news on it. But yeah, we'll go through the watch list tonight, come up with a gameplay for tomorrow. I love y'all. I will see y'all later on tonight. Appreciate y'all being here. Have a good one.